Let's start, guys. Okay. Till yesterday we were done with BRS. No. Now let's go to which chapter next.
Inventory.
So we have inventory, bill of exchange, depreciation. Okay. The next bill of exchange. What about inventory?
Yes,
Huh? ಅಲ್ಲ ಇವತ್ತು ಮಾಡೋದ್ರ ಬಗ್ಗೆ ಹೇಳಿ ಇನ್ನೂ ಇದೆಯಲ್ಲ ಇನ್ನೂ 3 ದಿನ ಇದೆ. ಹಾ ಸೊ ಮೂರುನಾ ಇನ್ವೆಂಟ್ರಿ ಓಕೆ ಬಿಟ್ಟು ಹಾ ಶೋರ್ Okay, then let's start with inventory only. Okay. Now, what do we learn in this unit? See, the valuation of inventory is very important. Okay, for your accounts. Where will valuation of inventory come generally? Where will inventory come in your whole accounts? Since inventory being an asset, it will come in balance sheet. One thing. One more thing is in trading account while preparing. In the credit side, it will come as closing stock. Why will closing stock come in trading account? For complaints of your matching concept. Correct? So what will happen? One small example to take. A repeated example. So say suppose you have purchased 10 mobile phones for 1,000 rupees each, okay? And then you have sold 5 mobile phones for 2,000 rupees each. So how much is your purchases? Just to see the trading account.
10,000.
Your purchases is 10,000. How much is your sales?
Sale is 20.
5 mobile phones at 2,000 rupees each. So sales became 10k. So profit 0. Zero only, no? See? Because you are comparing the sales of 5 mobile phones with the cost of 10 mobile phones, which is not correct, not in compliance with matching concept. You have to compare cost of 5 mobile phones with sales of 5 mobile phones, correct? No. Now to make this proper, what will we do? We'll put closing stock here. How much? We have 5 mobile phones, cost is 5k. How much did profit become? 5,000. Now it is correct. This is the reason why closing stock will come to trading account and it will come to balance sheet because it's also an asset. Done. And why is valuation of closing stock very important? Because your closing stock is directly proportionate to profit. Correct? No. See, now it is your closing stock is 5k, profit is 5k. If you make closing stock 6k, what will happen to profit? It will become 6. Okay. Then if you make your closing stock 7, profit also becomes 7. If you decrease it, this will also decrease. So if you see, closing stock is directly proportionate to profit. So that's why if you by any chance overvalue your stock, what will happen? Your profit will go up, which is wrong. Correct? So that's why it is very important. So cost will be valued at what? As per accounting standards 2, inventory will be valued at cost or NRV, whichever is lesser. Why? Conservatism concept. See, cost, the cost incurred to manufacture or procure that product. NRV is what? For your understand it to be a market value. Okay. Now, the cost that you have incurred to produce is 1 lakh. And the market value for the product is only 30,000. And if you want to sell this product today, you're getting only 30,000. Then why will you value it at 1 lakh? People are ready to give only 30,000. Now, if you overvalue your stock, your profit will go up. Not correct. So that's why they are telling if cost is 1 lakh and NRV is 30,000, value it at NRV only, conservatism. If NRV is much more than cost, then value it at cost. So cost or NRV, whichever is lower. Clear? Now let's understand what is cost and what is NRV. What is cost? Cost means whatever cost you have incurred to purchase or produce this inventory, all that will come. That's a cost. Production cost plus minus all the trade discounts. You know what is trade discount? Minus all the trade discounts. And if you have any refundable taxes, will you add it? Or will you add non-refundable taxes? You understand what is refundable, non-refundable? You know GST? Is GST a refundable tax or non-refundable? Refundable or non-refundable? It is refundable. Why? Because in GST we get credit now. Whatever we have paid to our suppliers, we can use it while paying our taxes, outward tax liability. So GST is a refundable tax. Will you add refundable taxes? No. However, you will get it back. Why will you add it to the cost? Correct? No. Then you'll add any non-refundable taxes. You'll subtract trade discounts.
Example for non-refundable tax.
As of now, example for non-refundable tax. Your custom duty. You can take your custom duty. Custom duty, the refund allowed. You'll not do it. Once you pay, gone. Okay. Whenever you import something. Then what do we have? Then all the directly attributable costs. You know what is directly attributable costs? Don't know. Yesterday in the recent classes we have discussed. Neenu illade nanilla, all that. Traveling, loading, unloading. All such costs which are very necessary to bring the inventory to the location of where we sell it. So all that cost will be added to the inventory. All the directly attributable costs. We'll subtract all the trade discount, add all the non-refundable taxes. Then what? Anything else? So these are the costs that will generally come. Some things you will not include. What will you not include? You'll also include normal loss. You know what is normal loss? Normal loss. The loss which you cannot avoid. Say suppose you are producing butter. Okay. When you're producing butter, what do you need? Milk. So you're procuring milk. When milk is coming via van, okay, from 5% of it will go because of evaporation. Can you control it? Every day when you want to procure milk, 5% will go for evaporation. We cannot control it. So at some point, this loss will become our cost because we are not able to avoid it at all. Then you can add normal loss. What about abnormal loss? Abnormal loss you cannot consider. Don't include. What is abnormal loss? Same example, lorry is coming, accident happened. An entire procurement gone. Will you include this also in the cost of inventory? No, abnormal loss. It will not happen every day. That I will not include in the cost. Okay, but normal loss I cannot avoid. It happens every time. But abnormal loss will not happen every time. Therefore, I will not include it in the cost of inventory. Then selling and distribution costs. What is selling and distribution costs? Okay, suppose you have already manufactured the good. Okay, your factory is somewhere in Sarjapur. Okay, now what people will come to your factory and they will purchase? No, they will not. So you have to give some. You have to do some marketing, give some money to distributors. Who are distributors? These distributors take your product and distribute it to all the retail outlets. So will they do it for free? No, they'll incur some money. Okay, all that is called as selling and distribution cost. Will you add that to inventory cost? No, because it is not at all directly attributable to purchase or produce inventory. So selling and distribution costs I will not add. Then what I will not add? Admin. You know what is admin cost? Now if Success Edge is an entity, people sitting there in the reception, they are all administrative people. They ensure that Success Edge is running all that application, talking with students, counseling, everything is done by them. Okay. Is the existence of admin necessary for me to deliver my lectures? No. Similarly, is admin important for production or procurement of goods? No. So therefore, we will not add any admin related costs also. These are the things. Then what all will you add? These are the things which you will not consider. These are the things which you'll add. Then you'll also add processing cost. What is processing cost? Say suppose you are a manufacturer. Okay, you are converting processing cost or conversion cost. Okay, You are converting raw material into finished goods. So whatever cost you have incurred for this process, that also you will add. What will you incur? If you are producing the goods in where?
Machinery.
Your machinery you are using. So what is the cost for machinery? Depreciation. Depreciation is the cost of the machinery that you can allocate it to cost of the inventory. Then factory rent, that is directly attributable. Then wages paid to labor. All these are what? These are the direct expenses incurred for the production of the inventory. Correct? All this will come under your processing or conversion cost. So you will add it to the cost of the inventory. Anything which is directly attributable to the manufacturing. Correct? Even depreciation. Depreciation of the plant and machinery. Why? Because we are using plant and machinery for production. Then what is the cost of plant and machinery you are using? Every year, what will we charge to P&L as cost of depreciation? I mean, cost of machinery. Depreciation. That's why we'll add depreciation of plant and machinery also to the cost of the inventory because that is necessary for production. Clear? These are the things we'll add and these are the things we will not add in the cost component while valuing inventory here. Cost or NRV. Then what is NRV? Wow. Expansion of the. So net realizable value. For your example, I told it's as good as market value. But if you go by the standards, net realizable value is estimated selling price minus estimated selling expenses. Okay. Estimated selling price means as good as market price. Say suppose we are producers of iPad. Okay. It is 80,000 rupees. Say suppose estimated selling price is 80,000. Why are they considering selling expense? Now tell me, same example, your factory is in Sarjapur. Without incurring selling expense, can you sell the goods? No way. It will be in your godown only if you are not ready to pay selling expense. So tell me, if 80,000 rupees is the selling price and selling expense is 2,000 rupees per unit, then what is your net realization? It is 78. Though you are getting 80,000 for selling, 2,000 is a cost that you cannot avoid. Without that, you cannot sell only. So that's why your net realizable value became 78,000. So your NRV is estimated selling price minus estimated selling expenses. So that is about your cost or NRV. Next, what all comes under inventory? When you say inventory, only unsold goods, huh? We'll come there. When I use the term inventory, what all will you include here? What is inventory? Stock, in your opinion. Goods which are unsold. Alva, you have bought it or produced it, but it is remaining unsold. Ashte Allah. It includes a lots of other things as per accounting standards. Not only unsold goods. It includes unsold goods also. What all other things it includes? It includes raw materials. If you are manufacturing, you would have procured raw materials. It includes raw materials. Then it includes WIP. What is WIP? Work in progress. Means you have started the production, but it is not yet completed. Those goods will be there, no? These are WIP. Then stock in trade. Say suppose you are a trader. I thought here you are not manufacturing, you are just purchasing and selling. So for that purpose, if you have purchased something, that will come under SIT. You have purchased but you have not sold. Then consumables will come. What is consumables? Consumables means anything that you consume in the production process of a inventory. I thought, now say suppose if I'm producing iPad, I use a lot of screws. Correct? Within the iPad. All these are what? Consumables. For packaging, I will use bubble wrap. You know bubble wrap? These are what? These are getting consumed in the process of production. Bubble wrap, screw, nuts, all these small things will be there. No, all these things are considered as inventory. Then you have two more things which will come: joint product and byproduct. What is joint product? Okay. Best example is your crude oil. Okay. If you process crude oil at a certain level, it will become petrol. Further, if you process, it will become diesel or vice versa. I don't know. Don't quote me technically. Okay. Huh? So, but here, what is happening in joint product? You have one crude oil, but here you have the intention to produce both the products. If you want to produce only petrol from it, you can stop it at petrol. Okay, if you still want to produce diesel, you can further process it and produce diesel. Right? The joint products are those products which are getting produced in the same production process. You are doing the same production process, but two products are coming in, and you have the intention to produce both the products. These are called joint products. Byproduct is ulta. You are producing one product only. The other product is coming without your intention, and you're not able to avoid it also. That is the example of byproduct. Best example is butter and buttermilk. If you want to produce butter, then buttermilk will come. Can you avoid it? No. So butter and buttermilk is what? Buttermilk is byproduct. Butter is main product. In joint product, butter and after butter, ghee. Butter and ghee are joint products. Okay, you have intention to produce. You have to further process it to produce butter and ghee. But butter and buttermilk, you don't have a choice. Okay, those are byproducts. These are joint products. How will you value joint products? First of all, how will you allocate the cost? See, in joint products, you have only one production process. So you'll be incurring joint production cost. I thought that joint production cost you have to allocate it to both the products now, because in joint products, two products came out. How will you allocate? In the ratio of selling prices of those two products. Okay, say butter goes for 500, ghee goes for 500. Then total cost should be divided among butter and ghee in 1:1 ratio. Clear? In byproduct, what will happen? We don't care. Whatever byproduct we had, no, we will sell it off. And whatever money we got from selling the byproduct, that is by selling the buttermilk, I will subtract it from the cost of production of main product. Correct? In byproduct, there is one main product, that is butter. And this is buttermilk. The total production cost, say suppose, is 1000. And by selling buttermilk, I got 80 rupees because it was a byproduct. What will I do? I subtract the receipts from byproduct from the cost of production. I thought because it's a byproduct, I did not have intention, but I got money from it. So it is helping me to reduce my production cost. Okay, then this is about cost allocation. Is joint product and byproduct are also inventory? Yes, they are inventory. Joint product will be valued at what? Same cost or NRV, whichever is lower. Same rule. For byproduct, in byproduct for the main product it is this rule only. Cost or NRV, whichever is lower. For buttermilk, since it's a immaterial portion of our inventory and we don't have intention, we don't do all this cost or NRV there. Buttermilk will directly value it at NRV. Will not do cost, NRV, nothing. Byproducts are valued at NRV, whereas all other things are valued at cost or NRV, whichever is lower. Clear? Done. Then what do we have? Then how will this stock amount come to trading account? Automatically? No. At the end of the year, what will we do? We will go down, we will count. From there, we'll get the value. Now, here I'm telling it simply count, but it is not this simple. In this counting also, we have two methods. In inventory taking only, we have two methods. Okay, this going to go down and inventory taking. Two things. Which are the two methods? One is periodic inventory taking, and one more is perpetual inventory taking. Okay. These are the two methods of inventory taking. What is periodic inventory taking? This is our understanding. At the end of the period, you're going at the end of the period to the go down and counting the stock that you have. This is called inventory taking periodically. You're going at the end of the period, go count, put the closing stock out. Perpetual means what? In perpetual, we are not counting. Perpetual is real time. That means your ERP is there now, your software. That is only calculating the inventory, closing stock, basis on your purchase and sales. Say suppose you purchased 1000 units and sold 200 units. How much is remaining? 800. This calculation is automatically done by your accounting software. Okay, no need for you to go every time and count the inventory. Okay, and it is real time. It updates real time. That means if you sell something, immediately your closing stock will be updated. Is it the same in periodic? No. Until you go there and count, you will not know what is the closing stock. But here, every day your stock is getting updated real time. Understanding the difference between periodic and perpetual? Correct. Now tell me, if you're a small business or something, tell me the small business will be using which method of inventory taking? Periodic, because it is cost effective. Perpetual, and they should have proper software. So of course, big entities will be using perpetual inventory taking system. Here, these are the two ways of inventory taking: periodic, perpetual. Now, one big problem came while doing inventory taking. Big problem was, say, suppose we are the dealers of interchangeable goods. Interchangeable goods, and similar goods, and everything is same. Whatever I'm selling is same. If you go to my godown, everything is same. It is interchangeable. What do you understand by interchangeable? Say, suppose while selling, instead of giving this good, if I give this good, problem shouldn't happen. Anything, I should not care. I should be able to give it like this. It is interchangeable. Instead of this, if I give the goods which is there in the last, it should not matter because everything is same. These are called interchangeable goods. Ondru badlu innondu kotru en tondre agbaradu. Okay. Now you have interchangeable goods. Now what? Purchase you do only once in your lifetime. No, purchase happens at different point of time. I thought, say suppose you purchased in January at 100 rupees. You purchased in February for 105 rupees. Same product, same exact product, the price has gone up. You have purchased it for 105 rupees per unit. In March, you have purchased for 200. April, 205. Okay, like this you have purchased, various purchases you have done. Then you have done sales also, various sales you have done. Now out of total, say suppose in this purchase you have purchased 1000 units. And later you have sold 500 units and remaining 500 units is there in closing stock. Okay, now tell me, 500 units is there, I know. Which cost to take? 100 or 105 or 200 or 205? Problem. Now we have to do some assumption. Because if you go here, everything is same. How will you identify which one is which purchase? Because whenever sales is happening, you have not even seen this side. You have directly given it to people. Now what to do? Here, assumptions will come. Now there's no way to find out. Now we have to do some assumptions. There are 3 assumptions to solve this problem. 3 assumptions are C4, E4, and weighted and the average. Okay. So what will I do in FIFO? FIFO is an assumption, first in, first out. And when goods are coming in first, then those are the goods which are going first out whenever the goods are getting sold. That is the assumption I am doing. Okay. Now say suppose, let's take the same example. These are the different rate. Okay. Units. Say it is 200, 300, 500, 600. Okay. Now I have sold 500 units. So what is my assumption? This 500 units has first gone out from 200, then it has gone out from 300. The inventory that is remaining in my godown is this 1100. 500 is of 200 rupees, 600 is of 105. This is how I value. Correct? So how much then it is? 1 lakh. Something will come. Okay. So that is the valuation of your inventory as per FIFO. You are understanding the assumption? Goods which came first are going first. Second assumption is LIFO. Last in, first out. Goods which came last is going first. Then tell me, if you have sold 500 units, this would have gone from where? 600. Entirely it would have gone from this lot. So still how much is remaining in that lot? 100 units is still remaining. So 205 into 100 is still remaining. Then these are completely remaining, untouched. At prices, here only it is there. And you'll value closing stock in that way as per LIFO. What will you do in average? In average, you have 2 types of average. One is your simple average and one more is your weighted average. So in simple average, no need to take, no need to worry about anything. Okay. Take average. Take all the procurement prices that you have. Tell me. 100, 105, 200, 205. 4 price you have. Average it. 100, 105, 200, 205 divided by 4. How much? 150? 2.5. So you got the average price. Value your inventory at this price. How much inventory do we have? Total I have purchased 500,600 and I have sold 500. That means remaining is
1,100.
I will value this 1,100 at 152.5. That's all. That is what you are doing. That's how we value. Weighted average, in weighted average, what will you do? Here you will give weightage to those prices which you have purchased in larger quantities. See what happens in simple average. You are giving equal weightage to all the prices. That is simple average. See, imagine a situation where 90,000 units you have purchased for 90 rupees. Aita. Only 100 units you have purchased for say 10 rupees. Okay, I'm exaggerating for you to understand. Aita. 90,000 at 90 rupees, 100 units for only 10 rupees. Now tell me, which out of the two prices, which is the price that you should use? Which reflects the actual situation? The majority of your purchase is 90,000. So the chances are that in your inventory, the most of the items that are there is 90 rupees goods only. But if you average it, what will happen? 90 plus 10 divided by 2. If you do simple average, this will happen 50 rupees. Then you'll value all the inventory at 50 rupees. Is it the fair thing to do? No. That's why what we'll do is, while taking average, we'll give more weight to those purchase prices which are purchased in large quantities. So what I'll do? So what I'll do is I'll multiply. Okay, 200 into 100, it is 20,000. This is 105 into 300. Patta ಮಾಡಬೇಕು. 31,500. This is 1 lakh. This is 63.
1,23,000.
Now if you add all this, what will you get?
Two lakh 75,500.
2,75,500 divided by, what will you divide it by? We are all math students also. Not math student. Total of units. So ಎಷ್ಟು 1,000.
600.
If you take total units, first total price by total units. So how much did you get?
172.18.
172.18. Now your simple average price came up to 152 something, no? But your weighted average price came to 172.18. So I'll consider this price to value the 1,100 units. This is your weighted average. What you're doing, giving weights to the price, to the purchase price which is purchased in larger quantities. That's all. Done? Any doubts still here? Okay. Now, do you think your FIFO, LIFO, WM that we are doing, it differs in case of periodic and perpetual? Does it differ? Yes. Why? Because periodic is being done at the end of the year, whereas perpetual happens then and there. The moment you purchased, the moment you sold, that the accounting software is applying FIFO, LIFO concepts there only, that date. But in periodic, what is happening? You're applying all this on end of the year. So because of which it will change. Okay. Now you have a specific example in your, this thing only, in your material only, where we have done in our class that FIFO. Under FIFO, we have done it in both periodic and perpetual. Okay. FIFO will come around same number, but LIFO and all starts changing. Simple average will not change. For periodic or perpetual, simple average will not change. Weighted average for periodic, perpetual, it will change. Okay. LIFO, it will change. FIFO also, it will change in certain crazy circumstances. Okay. Understood? Do you want me to do that? Because it takes a lot of time. Correct. You understand that now? We can skip that now. How it happens in perpetual, how it happens in periodic. That we can skip. ಹೇಳಕ್ ಬರಲ್ಲ ಹಣೆ ಬರ ಇಲ್ಲಿವರೆಗೂ ಬಂದಿಲ್ಲ ಅಂತ. ಬಟ್ ಅದನ್ನ ಬಿಡೋದ್ರಲ್ಲಿ ಏನಿದೆಯಪ್ಪ 5 ನಿಮಿಷದ ಕೆಲಸ ಅದು. ಎಕ್ಸಾಮ್ ಅಲ್ಲಿ ಬಂದಿಲ್ಲ ಅಂತ ಬಿಟ್ಬಿಡಕ್ಕಾಗುತ್ತಾ? Please go and refer. Okay, if you have any doubts, let me know later. Simple matter. How we did know, we have to do it then and there. That's all. It is no difficult thing. Okay. So that is about your FIFO LIFO WM. Then what do we have? Then one more way of finding out the cost of inventory. That is your adjusted selling price method. See, in this chapter, our one and only purpose is what? To find out the cost. So one more way to find out cost is, say suppose in the question you have some closing inventory. You know the selling price of the closing inventory. Correct. What is the selling price of closing inventory? Into selling price. You got the in closing inventory at sales price. Now if you know GP margin, what is GP margin? Gross profit percentage. If you know your profit percentage, you can apply on this. Then you'll get the profit. Now if this is selling price minus profit, you got cost. You got the cost of the inventory. This is one more way of finding cost of the inventory. Adjusted selling price method. They would have given you selling price. Apply GP margin. You got cost. Clear? But there's something you should know. This is from your exam point. I feel this discussion is important, which is why I'm bringing. Now, what is GP margin? Gross profit by sales into 100. Correct? All of you? Now, in the question, they would have given 20% profit on cost. I thought 20% profit on cost. That means what? Let's take an example. Cost is equal to 1000. Profit is equal to 1000. Selling price is equal to 2000. Correct? Now, in the question, they would have given or first profit percentage on cost. What is profit percentage on cost? Profit calculated upon cost. So formalize profit by cost into 100. So it is 1000 by 1000 into 100. So it is 100%. Same thing. What is profit percentage on sales? Profit by sales into 100. That is 1000 by 2000 into 100, which is 50. Same thing, but you got two different profit percentages, correct? No? Same thing, you got two different profit percentage. So, whenever in the question, if they have given you profit percentage on cost, this, now I'll tell you, this percentage can be applied on what amount? On cost only, because profit percentage on cost is calculated on cost. So, if you want to arrive at a profit, again, can you apply this on sales and can you get the profit? No. This percentage you can apply only on cost. 1000 into 100%, 1000 you got. And this percentage you can apply only on sales. See, 50% into 2000, you got 1000 rupees. Profit is correct. If you apply this 50% on cost, will you get the answer? No. Will you get this? No way. Okay. So profit percentage on cost should be applied on cost. Profit percentage on sales should be applied on sales. Now tell me, gross margin is calculated upon sales. So I can tell that profit percentage on sales and gross margin both are same because both are calculated upon sales, and you can apply it only on, you have to see the denominator in calculation, that it can be applied only on the denominator. If it is calculated upon sales, sales price, on cost, cost price. Very important point this is, okay? It will not only come in inventory, it will come in various other places. Clear? This concept is clear with respect to profit percentage. Now I'll give you one small calculation. We'll see what you have understood. Profit percentage on cost is 100%. Sale price is 2000. Okay. Calculate profit. Hey, I know you're telling it from the example. Hanga. Ella change mabudti. Make it 10,000 and make this 25%. Change. So it is 8,000.
Profit is 2,000.
Profit is 2,000. That's you told to apply percentage on sales, but you have not given sales price only. That is what I say it is, no? Direct. So how to do it? Whenever situation comes like this, what you have to do is you have to make one small assumption. Let 100 rupees be cost. Assume let 100 rupees be cost. Then how much will be profit? Now you can apply this percentage on cost, which is 25. So your sale price became, say, what is sales price? Cost plus profit. So cost is 100, profit is 25. Sales price became 125. So your profit percentage on sales is, profit is 25, sales price is
125.
into, so how much is your profit percentage on sales?
22.
20%. Now you found out profit percentage on sales. This you can apply. 20% on 10,000. So how much is the profit? Now profit is 2,000. Cost is 8,000. Think if they give ulta like this, you have to do it like this. Make one small assumption. ನಾವು ಹೋಗ್ತಾರೋ ಪೇಸ್ ನೋಡಿದ್ರೆ ನಾವು 6 ಅವರ್ ಜೊತೆ ಇನ್ನೊಂದು 6 ಅವರ್ ತಗೋಬೇಕು ಅನಿಸ್ತಾ ಇದೆ. But I find most of students find inventory little difficult. It's okay. No, thank you. Evening batch students. Hello, I'm just joking. Nana. Now same ulta. Now let me see how will you do. Profit percentage on sales is 33%. Selling price is say 10,000. Cost price is 10,000. Find profit. Same way. You can follow that assumption method. Huh? 24.81. Okay.
403.06.
Profit. ಇಲ್ಲ ಡೆಸಿಮಲ್ ಬರಂಗ್ ಮಾಡ್ಬಿಟ್ಟಿಯೇನ. Same thing here also. Ulta it is there. How you can solve it? Let 100 rupees be bought. Let 100 rupees be sales. Okay. Now if you apply 33% on sales, what is your profit? 33. 100 into 33%, 33. How much is your sales price according to this? 100. Cost price? Cost is sales minus profit. How much is your sales? 100. Profit? 33. So your cost price is 67. Now if I want to calculate profit percentage on cost, so how much is profit? 33. Cost? 67 into 100. So how much is your profit percentage on cost? 49.25%. This you can directly apply on cost price. So your profit is 4925. Okay. So like this you will make a small assumption. All of you got a 4925. Did anyone got it? Okay. Then. So this is very important discussion, not only from this angle, from other angles also. Then So come to this question. It is very important, 8th one. Okay. We've already done this. From the following particulars, ascertain the value of inventories as on. We'll do one thing. We'll do 7th, 8th, 4th. 7th one. So if you see, Messrs X, Y, and Z are in retail business. Following information are obtained from the record for the year ended 31st March 16. Goods received from suppliers. That is your purchases. Okay. Guys, here they want us to find out the inventory via adjusted selling price method. Which, how do we find out in that method? Sales they would have given, sales price of closing stock they would have given, minus profit, you'll get the cost. That is what we have to do, simple. Here they have given us purchases and they say subject to trade discount and taxes. That means what? Trade discount and tax they have not considered in this 1575. So we have to consider. Let's consider 1575 500 minus trade discount minus 3% plus 11%. So how much do you get?
1696
1696
340.
1696 340. Okay. Then what is packing and transporting charges? Is it a direct expense which will come to trading account? Direct expense, alva. Say suppose you are a trader. Packaging and transportation or manufacture anything. Packaging and transportation is a direct expense or indirect expense? Direct, no. For procuring the goods, you have paid transportation. Don't you think it's direct? Without incurring transportation costs, can you purchase? Is it possible? Not possible. So it is direct expense.
Sir, but can't it be selling and distribution cost?
What?
Why are we assuming that it's the price which we are?
See what it is associated with. Packaging. Oh, you're telling why not during sales? Huh? Now what can I say? See, packaging, I would go with that assumption only. See, packaging is associated with production only. Correct? Huh? We are not talking about the sales packaging. See, sales packaging also is done during the production only. No? What do you think? Again, sales ಮಾಡುವಾಗ ಮತ್ತೆ ಕವರ್ ಎಲ್ಲ ಕೊಡ್ತೀವಲ್ಲ ಅದೆಲ್ಲ ಇಲ್ಲ. This packaging is happening during production. And transportation is to procure the materials. Okay. So it's a direct expense which is happening during purchases. Then we have sales. Then we have sales price of closing inventory. See, they have given us the sales price of closing inventory, but we want cost of the closing inventory. Okay. So they have given other information. So how can we solve this? See, simple. Under adjusted selling price method, sales price they have given, which is nothing but 2,35,000. From this 2,35,000, if I subtract profit, I will get cost. That's all. But have they given us profit? No. Have they given us profit percentage at least to calculate? Nothing. Now what we have to do? We have to find out profit. Your GP margin we have to find out. Where will we get GP margin generally? Where will we? For calculating GP margin, you need gross profit, right? Sales into 100. Now sales they have given, but gross profit it is not given. So we have to calculate. So what to do? Where do we get gross profit generally? In trading account. So prepare one trading account. Working note 1, memorandum, trading. Okay. Now, before coming to this memorandum, one more logic I have to tell you. Or else later you'll be. One more logic is. Now let's take our same earlier example. I had purchased 10 mobile phones. Okay, for 1,000 rupees each, and I'm selling one mobile phone for 2,000. This is my selling price. Correct? No? So let me find out the GP margin of one product. Okay, what is the GP margin of one product? Only one. How much is the profit? 1,000. Sales? I'm doing only for one product into 100. So GP margin 50%. Okay. Now let's prepare a small trading account only for this. So your total purchases is 10,000. Sales is I have sold 5 mobile phones. No, I'm doing in total. Out of 10, I have sold. Or let's assume we have sold all the 10. I thought 20. Okay. So how much is your GP?
10,000.
Now if you see, let's see the overall GP margin percentage. Overall, how much it is? 10,000 by 20,000 into 100. It is. Now if you see, the overall GP margin is also same. Per unit GP margin is also same. You're understanding? Now, basis on this, I'll tell you one thing. Say true or false. Okay. If I'm selling all the goods at the same GP margin, then ultimately the overall GP margin will also be same. Clear? Any doubts here? Say suppose some goods I'll sell it at one selling price and some goods I'll sell it at another selling price. Do you think the overall GP margin will be same? No, it will get disrupted. So for the purpose of inventory, what I would like to clarify is if you are selling all the products at the same GP margin, I will call it normal sales. Normal sales. If you are selling goods for any other GP margins, then I'm calling it as abnormal sales. Because the moment abnormal sales come, the overall GP margin is disrupted. This concept should be there in your mind for our further discussion. Okay. You understood now what I told? GP margin, if all the products are sold at same price, then only overall GP margin will be same, or else it will get disrupted. Some other thing will come. Okay. Now coming back to our discussion, to this question. So we need gross profit. So we are preparing trading account. So what all information they have given? They have given to purchase, which is how much?
15 lakhs.
Then we have that 15 lakh 75. We subtracted and added some 16 lakh 96 340. Okay, 96 341. Okay. Then we have the direct expenses, packaging and transporting, which will come in. Direct expenses will come where? In trading account only. Indirect will come in P&L. So that is also direct expenses, packaging and transporting, or at least I am assuming that this is towards packaging and transporting of purchases. Okay, how much it is? 8 87 500. Okay, then they have given us sales. How much?
500.
Then closing stock. They have given, but they have given it in selling price. I cannot put it in selling price. I have to put it in cost only. Now what to do? Then again loop problem. I need cost to cost. I need gross profit. Gross profit. I have to prepare trading account. For trading account, I need again closing stock. Loop. He loops one again. Assume. You have to assume something. Now, as I already told, no matter what is the sales, actual or real, will the GP margins be same? Yes. If I sell all the this thing, what do you say? The mobile phones that I've purchased, GP margin will be same. I've sold only 5. GP margin will be same. 6, GP margin will be same. So I'll do one assumption. However, they have given closing stock in selling price. What I'll assume is, I'll assume it to be sold. I'll assume that whatever closing stock is given in selling price, it is sold. Now, if I assume it to be sold, what will happen? My sales will increase. By how much?
2 lakhs.
Sales should be there in sales price only. However, we have it in sales price. So we'll add that amount. How much? 2 lakh? 35,000. I'm assuming everything to be sold. If I assume everything to be sold, will the GP margin will be still same? Yes. We want GP margin. No? I know it is not the actual sales, but I want only GP margin. For that, it's okay to do this assumption. Closing stock will become 0. I assume everything to be sold. No? Now closing stock is 0. Now how much is my gross profit? 6,96,615.
659.
I got the gross profit. Now can I find out the GP margin?
Yes.
Yes, find out GP margin. 6 lakh
96.
96,659 by
24,859.
by take the total sales.
24.
Our assumed total sales 24 2480.
28.09.
The GP margin is 28.0. We got it. Now we got the GP margin. We are done with our work. So how much was our selling price of inventory?
24.
It was 2,35,000. Now I got GP margin. Is this at sales price? Yes. So I can apply my GP margin on this. So 28.09% into 2,35,000 you got
66.
66
011.5.
011.5. So you got your profit. So how much is your cost? You got your profit. So sale price minus profit is equal to cost, which is
1,68,989.
989. So that is your cost of the inventory. Clear? That's all. Now come to the eighth one.
So the sales tax shouldn't be added to the cost.
Yes, actually, that's a small error in this question. Okay, because sales tax is technically refundable. We should not add. So do one thing. Write down an assumption here. Okay, saying that this whatever taxes is there, sales tax is non-refundable in nature. Okay, if they are given GST, and in the question if they are given GST, you are not supposed to add it. Your thing is correct, but it's an error in the question. We are assuming sales tax to be non-refundable. Write down if you want. But if in your exam, if they have given GST, what will you do? You will not add because it is non-refundable. Refundable. GST is refundable. So eighth one. So even this is based on the same idea. Let's see if we can do it. From the following particulars, ascertain the value of inventories as on 31st March 17. They have given opening stock, purchases, manufacturing expenses. It will come where? ಬನ್ನಿ ನನಗೆ 8 ಗಂಟೆಗೆ ಸ್ಟಾರ್ಟ್ ಮಾಡಿ 10 ಗಂಟೆ okay. So manufacturing expense is what? Direct expense. Correct? So it will come in trading. Manufacturing account irangilla. Now the trading account. Selling expense is the P&L. Administrative expense P&L. Financial charges P&L. So idella P&L item. Sales trading. Okay. Now at the time of valuing inventory as on 31st March 16, a sum of 17,500 was written off on a particular item, which was originally purchased for 50,000. See, this happened in last year and was sold during the year, in the current year, for 45,000. Barring the transaction in this item, the gross profit earned during the year was 20% on sales. Okay, I know, I'll tell you. So, in matter agbittide andre idu similar. Here we are trying to find out the cost via your adjusted selling price methodology. But the thing is, what has happened now? I would have put one trading account, no problem. The problem is, if you see the question, last year, at valuing the inventory of last year, that means the opening inventory of current year. This 1,42,500 is there. No, this was closing stock of the previous year. Here, what has happened? There was one item, one inventory. The cost of inventory was 50K, and maybe the NRV of that is 32,500. Maybe the NRV was 32,500. Okay. What they have done is inventory is valued at cost or NRV, whichever is lower, because of which they are valued it at 32.5. So they have written off how much? 17.5k last year. I thought 50k cost is it, but they have written it down to 17.5 in the last year. Done. And now it was sold during this year for 45,000. This item was further sold in the current year for. Okay, that is the information they have given. Only thing that you have to think is, now I told you one thing. GP margin will be intact only if we have normal sales. I thought if everything is sold at same profit percentage, then GP margin will be intact. Here, if you see, there is one abnormal sale. It is written down, then it is sold for some other price. Do you think GP margin at the overall level will be intact if this transaction is included? No. Correct? No. Only that thing. So what we have to do? But I want GP margin.
Remove it.
So what I'll do is I'll remove the effect of the transaction only. If I remove the transaction, will my GP margin be correct? Yes. So I can find out it easily. So what we have to find out? Closing stock. So simple. To find out closing stock, I'll prepare memorandum. Simple. Memorandum trading account. A particulars, see the line below. So two. First thing is opening stock. How much is your opening stock? 1,42,500. But this thing contains what? That abnormal item. Correct? So how much is there? How much is the abnormal item? It was 50. Then from 50, 17,500 is written off. That means it will be valued at 32,500. So I'll subtract 32,500. I removed it from opening stock. So how much it is?
1,10,000.
Then purchases.
7,62,500.
Then any other direct expense too?
Manufacturing expenses.
How much?
1,50,000.
1,50,000. Then other things are P&L item. Correct? No. This and this are P&L. Then sales.
1,45,000.
So by sales, 12 lakh 45 minus. I have to remove the abnormal because it is sold during the year. For how much? 40. That means sales is okay. Now closing stock is. If we just now closing stock we don't know. I thought we could have found it out as a balancing figure, but we don't know gross profit also here. Because you can find out something as a balancing figure if you have all other things. Do we have all other things? No. GP percentage. GP gross profit is not there. But in the question they gave. See, generally GP margin is 20% they have told. So based on that, can I calculate gross profit? Yes, 20% of 12 lakh is how much? Because GP percentage can be applied only on sales. So 20% of 12 lakh. Now I got GP also. Okay, now I can find out closing stock as a balancing figure. How much it will be? 62. That's all. I just removed the effect of abnormal. That's all. Because abnormal, what will abnormal do? Abnormal shakes the GP percentage. Okay. Because 12 lakh 45 included abnormal sale. Now, if I apply 20% on 12 lakh 45, will I get the right gross profit? No. Because that math will work only if all the products are sold at same margin. Then that math will work. So that's why what did we do? We excluded the effect of abnormal, and not for normal, we have done it normal. Clear? Any doubt, guys here? So those two are the questions. Then which one? ಎಲ್ಲ ಅಂತೂ ಮಾಡಕ್ಕಾಗಲ್ಲ. 12th one. Who told? 12th one. Okay, guys, we'll do 12th one. Either that reversal, that thing only. Okay. Now I told you how will we do inventory taking at the end of the year. We will go on that date. We'll do stock taking and we'll put it in final accounts. Okay. Now see here, the physical verification of stock in a business was done on 23rd June, and they wanted the valuation on when? 30th June. For 30th June stock, they have done physical verification when? On 23rd only, much before only. Okay. Now the value of the stock as on 23rd June was how much? 48 lakhs. Now what I have to do? From 23rd June, I have to go to 30th June. As on 23rd, it is 48 lakhs. Clear. So now they have given all the transactions that have happened between 23rd to 30th. Based on this, we'll arrive at 30th June stock position. So first thing what they have given. Out of goods sent on consignment, goods at cost worth 2,40,000 were unsold. So out of the goods sent on consignment, that means who are we? Are we consignor or consignee? We are consignor. Now if I am consignor, tell me, it should come in my closing stock or consignee's closing stock? It should come in my closing stock because I am the owner of the goods. It should come in my closing stock. Okay. Now out of the total goods that are sent, 2,40,000 is still unsold. So what I have to do it? Should I include it in my closing stock? Yes. So what will you do? Just add it. Because this 2,40,000 is not there in your go down. You would have counted where? Physical verification in your go down. But 2,40,000 goods is there in consignee's go down. So that's why it is your stock. You include it in your closing stock. No? So you add it. 2,40,000. Simple. Next. Purchases of 4 lakh were made, out of which goods worth 1,60,000 were delivered on 5th July. So when are we doing stock take as on 30th June? These are the purchases which has happened between 23rd to 30th. Okay. So tell me one thing. Purchases, will I add it up? Will I subtract it up? If I am going from 23rd to 30th. Purchases I will add. These are the goods which are purchased during there. As on 30th June, this will be there in closing stock. So what will I do? I will add this. How much? Oh, there's some more. Out of 4 lakh, 1,60,000. And what has happened? One bifurcation is there. Out of 4 lakh that I have purchased, 2,40,000 I received it. 1,60,000 is still there in goods in transit. And that I got it on 5th July means as on 30th June, what it is? Goods in transit. Now tell me, goods in transit, if I have booked something as purchases, then that should either come as sales or as closing stock. Now what will happen to goods in transit? It will not come in sales also. It will not come in closing stock also. Is it correct? No, I have to include it like how we discussed in case of consignment. Sorry. So if you remember consignment, what will we do? The stock will be lying in customers, but still we will add it. Why? Because that is our rule. No, either it should be there in closing stock or it should be there in sales. So similarly, goods in transit, I have included it in purchases. So it should either be there in closing stock or sales. But when I did physical verification, it is not there because goods was still in transit. So what I have to do? I have to add it. Aita. 2,40,000, however, purchases happened before, you will add it. 1,60,000, though it is delivered later, you have booked it as purchase. So you have to include it as goods in transit. Clear? This also. And the entire 4 lakh you will add. 2,40,000 normal purchases, 1,60,000 goods in transit. Then sales were 13,60,000, which include goods worth 3,20,000 sent on approval. Half of these goods were returned before 30th. Now sales, what will you do? You have done the physical verification on 23rd. So sales means what? Goods have gone out. That means you have to subtract. Will you subtract it at sales price only? No. Inventories are considered at cost. So while you are subtracting that sales, what you have to do? You have to consider it as cost. Now out of this 13,60,000, there is 3,20,000 which is sent on approval basis. Now out of this, what has happened? Half of these goods were returned before 30th June. So 1,60,000, what will happen? It will come to your closing stock because half it is returned, it will be there. So we want 30th June's position. So this much you will add. So out of 13,60,000, remove this goods sent on approval because remaining is still there only. Where? Out of 3,20,000, 1,60,000 only we got back. Remaining is with her only. Keep it there. So out of 13,60,000 minus 3,20,000, remaining is how much?
10,40,000.
10,40,000. This 10,40,000 is at sales price. I have to convert it into cost. So how much have they given profit percentage? Here, there we go. Goods are sold at cost plus 25%. Andre, this is the profit percentage calculated on cost. I have sale price. 10,40,000 is what? 10 lakh 40 sales price. Can I directly apply 25% on 10 lakh 40? No, I have to do that math which we did. So do that math and find out the profit percentage on sales. How to do it? If 100 rupees is cost, profit is 25. Sales price is 125. I want profit percentage on sales. So 25 by 125. Profit by sales into 100. How much? So I converted via the maths that we did. So 20% on sales. So 10 lakh 40,000 into 20%. It is 8 lakh. So 8 lakh 32,000 is the cost which I will subtract, because this is the sales that has happened between 23rd to 30th, and sales will lead to going out of inventory. So subtract 8 lakh 32,000. Then, however, goods costing 2 lakh 40 had been sold for. Oh, guys, one more point was there. Sorry, one mistake as well. These two are connected points. Okay, so come back here. So sales. E-sales only 13 lakh 60,000 was the total sales. Out of this, how much is your this thing approval basis? No, remaining sales was 10 lakh 40,000. Out of this 10 lakh 40, what has happened? 2 lakh 40, the goods which was costing 2 lakh 40 has been sold for. So this includes abnormal sales. Correct? This includes abnormal sales. So I've told you, abnormal sales I have to remove for GP margin to work properly. So what will I do? From this normal sales, I'll remove abnormal sales. So how much is abnormal sales? 1 lakh 20. No, 1 lakh 20. No, 2 lakh 40 is the cost. No, I'm not removing profit. I'm just removing sales. Out of 2 lakh 40 costing inventory, I've sold it for 1 lakh 20. So in sales, how much will be included? 1 lakh 20. Okay. So I'm removing 1 lakh. So normal sales is? My normal sales is 9 lakh 20,000. Then out of this approval, what happened? Half of it was returned. That means in half of it is accepted. So that is correct sale. So 9 lakh 20 plus approved is. So your total correct sales is. So all of you agree here? These are the normal sales out of 13 lakh 60. Now on this, I can apply my GP margin. So how much is my GP margin? 20%. So my gross profit is 2 lakh 16,000. I thought this is my gross profit. Is it my correct gross profit? What do you think? See, I'll tell you one thing. My actual gross profit is what? My actual gross profit is profit on normal sales plus profit on abnormal sales. Then it becomes total gross profit. My actual gross profit. Okay. This is what? 2,16,000. This is my profit on normal sales first. 2,16,000. What about my profit on abnormal sales? Profit or loss on abnormal sales? In case of abnormal sales, goods worth 1,20,000, sorry, 2,40,000 is sold for. So I have a loss. So this is a 1 lakh. So this I have to minus here. 1,20,000. That means how much is my actual gross profit?
96,000.
96,000. So I calculated my profit 96,000. So how much will be my closing stock? For that, one small trading account will put. So tell me, 2 purchases is how much?
48.
Out of the opening stock ಏನಲ್ವಾ? That was physical.
48.
That is what we have got on this thing. 23rd June, 48 lakhs. Out of that, purchase is 4 lakh. So we'll do one thing, not this way. So 48 lakhs we have. as on physical verification. This is on 23rd June. Then purchases. Purchases both have done. 2,40,000 plus goods in transit is 1,60,000. Then directly we have no purchase done 4 lakh. Then we have to account for sales.
So goods and consignment.
First one, goods sent on consignment 2,40,000. Then I have to take the effect of sales. Right? From sales, what I have to do? My total actual sales is how much?
13 lakhs.
Here we have already calculated. No?
10 lakh 80,000.
It was. Where did it go down? Oh, sorry. We had calculated here. My actual sales is how much? 10,80,000. So 10,80,000. We have excluded this abnormal also from 10,80,000. So including abnormal, how much? 8. No.
Plus 1 lakh.
Plus 1,20,000 you add. Total is 12 lakh. So out of 13,60,000, which will I not consider? The goods sent on approval only. 50% I got it back. So that I would have reversed. So 1,60,000. That means how much is my sales excluding this? No, this is the actual sales and this includes abnormal sales also. Okay, this I have to take. Okay, so 12 lakh. But this is at sales price. Wrong. I want to put it at cost. So I have to subtract profit. Do you know what is the profit?
96.
Yes, you just now calculated. It is 96,000. So cost is 11,04,000. So done. So remaining is the stock as on 30th June. 44, 62.
4.
Done now. Any doubts here? Clear? Done. So till here it is no problem. Here what you have to do is you have sales price. You have sales. They have given 13,60,000. But you cannot consider 13,60,000 because we are doing inventory and inventory outflow should be considered in terms of cost. So the problem was we had to actually find out the profit and subtract it from the sales so that we'll get the cost. Okay. Now in the question, the sales they had given was 13,60,000. But I did not consider 13,60,000 here in this calculation. I've taken 12 lakhs. Why? Because what is my total sales, including abnormal and normal? What is my total sales that I have to consider?
13,60.
No. 13,60,000 was the sales, but what happened? This 13,60,000 included 3,20,000 of goods sent on approval. If everything was approved by the customer, then my total sales I would have considered 13,60,000 only everywhere as total sales that has happened, including abnormal. But what happened? 1,60,000 was returned. If the return means what? That means they have not accepted. If they have not accepted, what I have to do? I have to reverse the sales. So my actual sales is how much? 13,60,000, but 1,60,000 was returned. So 1,60,000. This is my actual sales. Okay, 12 lakhs. So I had to consider 12 lakhs, but 12 lakhs is at sales price. So I have to remove profit. To remove profit, this is the calculation. Okay, all this happened. I had to remove the profit, but 12 lakhs included the abnormal sales, because of which I was not able to apply GP margin. So what I did, I took 12 lakhs. I took this sales. I found out the actual gross profit. Then that I removed it from 12 lakhs. I got cost. Clear? Okay. And one more thing where we could have found problem is in finding out the profit. Correct? No. In 13,60,000, I have to exclude 1,60,000, which comes to 12 lakhs. And to find out the gross profit, can I use 12 lakh? No, because it includes abnormal sales. So I removed abnormal sales, which was 1 lakh. So you got 10 lakh 80. So on 10 lakh 80, I applied gross margin. You got 2 lakh. But this is only profit on normal sales. What is profit on abnormal sales? 2 lakh 40 worth is sold for 1 lakh 20. Loss is, so your actual gross profit is 2 lakh 16 minus 1 lakh 20, which comes to 96,000. And my sales that I had to consider was 12 lakhs. From that, I removed this profit. I got cost. Now, this cost I have subtracted it from inventory valuation. Simple. Any doubts? Clear? Done. Next. We'll take the RTP question. No? There was one more crazy thing. What about 11th one? Do you want me to solve 11th one? Just check that question. That one is fine now. Okay. Any other question you want me to solve from this thing? So we'll go to this one there. Your ditto question now. Same question, guys. See if you want. Opening inventory, purchase, sales, manufacturing, they have given. Will you take selling distribution? No. Administration? No. Both are P&L items. At the time of valuing inventory, sum of 60,000 was written off, which was originally purchased for 1,65,000, and 60,000 is written off from it. So it is valued at how much then? In the last year? 1,05,000, and was sold during the year for 1,50,000. Except the above mentioned transaction, GP earned during the year was 20% on sales. Same ditto question. Okay. Anything different? No. Exactly same. Cheating. Let's see, May 25. Closing stock is valued by Zebra stores on generally accepted accounting principle. All this is escape. Okay, leave. Gap. Of course, we'll follow gap while valuing inventory. Stock taking for the year ended 31st March 24 was completed by 10th April. So what happened here? We are supposed to do valuation on 31st, but they have done it on 10th April. Later, in the sum we did, it had happened before. That's why we added purchases, subtracted sales. In this case, ulta window, because they're going back. Correct? No. Was completed by 10th April, and the valuation of which showed a stock figure of 5,02,500. Okay. After the end of the accounting year, until the date of completion of stock taking, and that between that period, 31st March, a same question, guys. We have this.
10th question.
Yeah, we have the same question. Sales for the next year were made for 20,625, and profit margin is being 33.33% on cost. Purchases for the next year. So they have given the sales between. So what will you do? This sales add or minus? We are going back. So sales would have minus ಆಗಿರುತ್ತೆ. If you're going forward, sales would be minus. But if you're going back, it will be added. So sales added back, but at sales price or no? At cost price. So how will you arrive at cost price? They have given you profit percentage. But that is 33.33% on cost. You want profit percentage on sales. How will you find out? Same thing. Same math is only what we have done. So you'll get 25%. So 33.33% on cost means 25% on sales. Okay, if you do that math, you'll get 25% on sales. So 25% if you multiply on 2625, you got profit. Subtract profit from 2625, you got cost. Okay. Then purchases for the next year included in the stock amounted to 27,000 at cost less trade discount 10%. So purchases, what will you do? Purchases will be added generally, but you have to minus because we are going back. So minus at cost. 27,000 is already cost, but trade discount is given. That you have to subtract. 27,000 minus 10%. You have to consider how much? 27,000 minus 2,700. That you have to consider. And during this period, goods were added to stock of the markup price of 900 in respect of sales returns. Goods were added to stock. So 900 rupees is what? Sales returns. I thought good as sales returns, what will you do? Sales add back antandre. Sales returns minus, but at cost. 900 is what? It is sales. You have to remove the profit and then subtract it. After stock taking, it was found that there were certain very old slow moving items costing 3375 which should be taken at 1575. That means cost is 3375, NRV is 1575. You have to value it at NRV. That means you have to decrease inventory by how much? How much? 3375 minus 1575. You have to bring the valuation to 1575. So decrease it by how much? 1800. So subtract 1800. Cost is 3375. NRV is 1575. Valuation hingagutte. Cost to NRV, whichever is lower. Bring it to 1575. So subtract it by 1800. Next, due to heavy flood, certain goods costing 4650 were received from the supplier beyond the delivery date, and as a result, the customer refused to take delivery and NRV became 3750. His cost is 4650. NRV is 3750. You have to value it at what? 3750. So bring it to 3750. That means subtract it by how much? 650, 250, 900. Subtract it by 900 rupees. That's all. We have arrived at the closing stock. Clear? ಈ ತರ ಬಂದ್ಬಿಟ್ಟು ನೆಮ್ಮದಿ ಕೆಲಸ. Done? So are we done with inventory discussion? Or do you want me to discuss anything from inventory? Done? All of it? Come. Okay. Then what I'll do is guys, for some reason I feel okay. This question might come. I thought sometimes I have this weird gut feeling. I don't know why. It has no reason, no logics, anything. But I feel whenever I see this question, I get that feeling. If I were the invigilator, I will give this question. Okay. So, all of you clear with this, sir? Or anything you want me to discuss from this question? Huh? ಏನೇನು ನಾನೆಲ್ಲ ಮಾಡ್ಬೇಕಾಗಿರೋದು ನೀವು ಆಯ್ತಾ ನೀವೇ ಹೇಳಿ ಇಟ್ ಟೇಕ್ 2 minutes we'll discuss it all. Okay, so ಇಲ್ಲೇನಾಗಿದೆ, they have given us 31st December stock and they want us to find out 31st March stock. ಆಯ್ತಾ, ಡಿಸೆಂಬರ್ ಕೊಟ್ಟಿದ್ದಾರೆ, ಮಾರ್ಚ್ ಕಂಡುಹಿಡಿಬೇಕು. Okay, they have given the in between information for us. Okay, what is the 31st December stock position? Calculator handy agiribadu. 80,000. So your stock as on 31st December is 80,000. From here we have to go to 31st March. First thing, stock sheet showed the following discrepancies. Page total of 5,000 has been carried to summary sheet as 6,000. The opening balance is overcast by 1,000. So ಜಾಸ್ತಿ 1,000 ಜಾಸ್ತಿ ಆಗಿದೆ. ನೀವೇನ್ ಮಾಡಬೇಕು? ಮೈನಸ್. ನೆಕ್ಸ್ಟ್, total of the page under cast by 200 ಅಂದ್ರೆ ಕಡಿಮೆ ಆಗಿದೆ. ನೀವೇನ್ ಮಾಡಬೇಕು? Add 200. Then invoice of purchases entered in the purchase book during the quarter January to March totaled 70,000 rupees. And the purchase book alli from December we are going to March. So the purchases that have happened between January to March should be added 70. But further they have told out of this 3,000 related to goods goods received prior to 31st December and invoices entered in April 2018 related to relating to goods received in March total to 4,000. So ಏನಾಗಿದೆ out of this purchase, okay, 3,000 related to goods received prior to, ಅಂದ್ರೆ the goods was already received in 31st December, but the purchase is getting recorded now. Now tell me this 3,000, will you again add it up? Already you have considered in December when it actually came. Now will you consider? No. So from 70 remove 3. Then invoices entered in April relating to goods. These are the goods received now, but the invoice I'm getting in the April. So this I will however add. So how much? 4. So 70 minus 3 plus 4. This much you will add. Right? Next, sales you have to minus because we are going forward. So 90,000 is there in the sales book. Out of this, 5,000 related to goods dispatched before 31st December. See, if it is dispatched before 31st, you would have already considered. Again, will you consider? No. From 90, subtract 5. And goods dispatched before March, but invoiced in April. This you will consider now. So 90 minus 5 plus 4. 4 you consider now as sales. This much you will subtract because it's at sale price. So you have to. This is at sales price, no? It is in sales book. You can do inventory movement only at cost. So you have to remove profit. How will you remove profit? Have they given? Yes. It is 25% on cost, but that is sales price. You cannot apply this percentage. So 25% on cost is, if you do that math, it becomes 20% on sales. So from 90 minus 5 plus 4, and 80, 89. 89. 89 into 20% together, you will get the cost. So that much you will subtract. Then during the final quarter, there was credit notes and sales returns. Sales returns, what will you do? Sales returns, you will get back the money, but 1,000 is at sales. You have to consider it as cost. 1,000 minus 20%, 800. Add back 800, you'll get the closing stock. Okay. Then guys, we are done with inventory discussion. So next, which one will we go to? Yadri? Depreciation.
ಸರ್ ಬೇಗ ಮುಗಿದೋಗುತ್ತೆ
ಏನು ಬೇಗ
ಬೇಗ ಮುಗಿದೋಗುತ್ತೆ
ಅದ್ರಲ್ಲಿ ಮಾಡೋದೇನಿದೆ ಅಲ್ವಾ? Which 13? Now in inventory? Yeah, we did. 800. Add back. I told now. Huh? Yeah, credit note is sales return. Okay. So if they have given credit notes, what will you understand? Credit note is for sales return and debit notes are for purchase return. You don't know. So they have issued credit notes and there are sales returns which has happened. Okay. Sales returns, what will happen? Goods will come back. Correct. So 1,000 is at sales price. Remove profit. 200. 800 should be added back because goods came. Here, same thing. So we'll do depreciation. Huh? All of you. What do you think? Bega. Depreciation ignore ಮಾಡ್ಬೋದಾನೆ. One crazy sum we'll take up, we'll solve, and we'll end it. We'll take it from RTP only, no directly. Provision for depreciation ಇರೋದಾ? I hope ಇದರಲ್ಲಿದೆ. ಟೆಕ್ಸ್ಟ್ ಬುಕ್ ಅಲ್ಲೇ ತಗೊಳ್ಳೋದಾ? ಓಕೆ. ನೀವು ಯಾವ್ದು ಹೇಳ್ತೀರಾ? ಯಾವ್ದು ಟೆಕ್ಸ್ಟ್ ಬುಕ್ ಅಲ್ಲಿ? Which question? 13th one. All of you, 13th one, okay? Some crazy question. On 1st April 2018, a firm purchased a machinery for. ಅದಕ್ಕೆ ಮುಂಚೆ ಒಂಚೂರು ಮ್ಯಾಟ್ರ್ ಹೇಳ್ಬಿಡ್ತೀನಿ ನಾನು, ಆಯ್ತಾ? So depreciation, you know what is depreciation and all that, and all I will not repeat. We'll directly enter into the matter. Okay, how to solve it. So, what is the depreciation entry? One method is depreciation to fixed asset account. And your direct, what is this entry? Depreciation is an expense increasing debit. Fixed asset is an asset decreasing credit. One more way is we'll not use this fixed asset account. Instead, we'll maintain the depreciation component only in provision for depreciation. So that method is depreciation to provision for depreciation. Same thing. But instead of crediting FA, I'm crediting provision for depreciation. Correct? So in this method, what would have happened? All your depreciation that you have given till date will be accumulated in provision for depreciation account, and it will be shown as subtraction from the fixed asset on the balance sheet. What will happen to your main fixed asset account in second case? It will be at cost only because depreciation is hitting the other account. Clear? Iste iverade matter. Okay. This is the matter. Then what will happen here? You have different methods of depreciation that you know. SLM. Oh, yeah. 1 minute. Till it gets charged over, we'll discuss. Okay. What were we discussing? Two entries we discussed. Depreciation to machinery, in other case, depreciation to provision for depreciation. What will happen to depreciation? Depreciation is an expense account. Later it will be transferred to P&L. Correct? This must be clear. Then to calculate depreciation, we have different methods. Which are the different methods? Straight line. In straight line, what will happen? What is the formula? Same amount of depreciation will be there every year, and formula is depreciable amount. What is depreciable amount? Cost minus residual value. Residual value is what? Scrap value. So cost minus residual value, depreciable amount divided by useful life. You got the depreciation amount. That amount you will charge it to P&L every year. Okay. Correct. In WDV, what will happen? One fixed percentage they would have given, that you will apply it on the written down value every year. So because of which the depreciation amount will decrease year on year. Then you have sum of digits method. What is sum of digits method? Remember, depreciable amount into remaining useful life divided by sum of digits. For example, if I say the cost of the asset is 10 lakh, 11 lakh, and residual value is 1 lakh. Okay. And useful life is 10 years. Tell me what is the first year depreciation as per sum of digits method? Cost is 11, residual value is 1 lakh. Aita. Useful life is 10 years. Okay, first year depreciation will be? So how to do it? 11. 10. So cost is 11 lakhs. Scrap value is 1. So your depreciable amount is 10 lakh. Into, as on first year remaining useful life is 8. You have to take 10. Whenever you are solving for sum of digits method, you assume only for sum of digits method, assume you are doing it at beginning of the year. So remaining useful life is 10. So 10 divided by sum of digits, which is 55. How will you find 55? N into n plus 1 by 2, if you do. And then 10 into 10 plus 1, 11. 10 into 11, 110 by 2, 55. Aita. So how much? 10 lakh into 10 divided by 55. So first year depreciation is
1,81,818.18.
done. Second year depreciation you will do 10 lakh into 9 by 55. Third year 10 lakh into 8 by 55, 7 by hangge hogtave. One thing you should not forget is whenever they say remaining useful life, don't consider yourself to be there in end of the year. If you are thinking that you are at the end of the 1 year, then remaining useful life will become 9. Not correct. Consider that year also. If you are at the second year, you will consider which number? 9. Third year, 7. Sorry, 8. My bad. Fourth year, 7. Fifth year, 6. Consider the first year also. So that is sum of digits. Next we have machine hour method, production units method, and depletion method. Correct? All the three are same. What will you do? In the question, they would have given how much you have produced, how much units you have produced. First year, 2,000 units you have produced. Second year, 3,000. Third year, 4,000. The total capacity that a machine can produce is how much? 10,000 units. How will you find out depreciation? Depreciable amount into units produced in the first year, 2,000, divided by total units that the machine can produce. Say that is 10,000. You got the first year depreciation. In the hour, they would have given the hours used and the total hours the machine can run for. What you have to do? Hours divided by hours used in first year, 2,000, divided by total hours into depreciable amount. You will get the depreciation value. Clear? Same thing with depletion method also, no doubt. Same thing. I thought these are the depreciation methods. Then what will happen? Close the door. So, some problem. We'll continue on the oral mode only. Okay. So, next what happens? Whenever you normally now know the depreciation entries. Depreciation account debit to machinery or depreciation account debit to provision for depreciation. Correct? No. Now, these are the two methods. Now, say suppose there is a sale transaction happening of the machinery. Then how to do the accounting? Okay, that we'll discuss. This sale accounting also is divided into two parts. One is, if you are doing, one thing is you can be following the first method of depreciation, that is directly hitting to fix the set account. One more is you are using provision for depreciation, two possibilities. Let's come to first one. In the first one, what will happen? Imagine you'll be maintaining machinery account. Whenever purchase is there, it will come in the debit side. Whenever there is depreciation, it will come in the credit side. Now there is a sale transaction happening. I think in the first method where you are not maintaining provision for depreciation. So what will you first do? First thing is there are steps. First step, give depreciation on the machinery that you are selling till the date of sale. First step is giving depreciation to the machinery that you are selling till the date of sale. Second, you would have received some money. I thought you would have received some money. Put it in the account as in the credit side as by bank account the money received. Okay. Then do calculation of profit or loss on sale of machinery. How will you do it? The sale price minus the carrying value of the asset as on the date of sale. If it is happening in the middle, then what you have to do? You have to also give depreciation till the date of sale and arrive at the carrying value. So sale price minus carrying value, you got profit or loss. If it is profit, it will come in the debit side of the machinery account. If it's loss, it will come in the credit side of the machinery account. So profit or loss, done. You're done with sale transaction. Then you have to give depreciation on the other remaining assets. Simple. This is the first method. Say suppose you are maintaining provision for depreciation account. Here you have two methods. The first method is maintaining machinery disposal account. Second, not maintaining machinery disposal account. Okay. What will you do in machinery disposal account? Okay, first we'll discuss the other than machinery disposal. Now, same, sale entries are all same. First thing is give depreciation till the date of sale, bank, profit or loss, everything is same. Where will you do all this? No, you'll not do this. First, when you give depreciation till the date of sale, that depreciation you will give it in provision for depreciation account. Because where will we give depreciation? Will we give it in machinery account? No, we will give it in provision for depreciation. So first thing you have to do is step 1. Give depreciation till the date of sale for the machinery that you are selling in the provision for depreciation account. Done. Then second step, you would have received money. So received money will come where? In the machinery account. Okay, machinery account, bank, credit side. Then you have to calculate profit or loss. That normal only. You'll calculate profit debit side, it will come. Loss credit side, it will come. Only one thing problem that we have is in first method that we discussed, depreciation was directly hitting the machinery account only, so no problem. But here what happened? Depreciation is not there in machinery account. It is maintained in a separate account. Now one thing what you have to do is take the depreciation of this asset which you have sold. Whatever depreciation is accumulated, no, in provision for depreciation account, take that, put it to machinery account, calculate it and put it to machinery account. Now provision for depreciation will have what balance? Credit balance. So to transfer it, you have to debit provision for depreciation and credit machinery account. That's it. Only depreciation was separate. What did you do? Take depreciation, put it in machinery account. Everything else is same. All other things, sale transactions is same. So in case of this case where provision for depreciation is maintained but other than machinery disposal, what are the steps? Step 1, give depreciation till the date of sale in provision for depreciation. Step 2, you would have received money, credit. In the credit, it will come in credit side of machinery. Depreciation till the date of sale will come in provision for depreciation account. That was first step. Second step, you received money, bank, credit side. Third, calculate profit or loss. If it is profit, comes in the debit side. If it is loss, comes in the credit side. Then give. Then you have depreciation lying in a separate account. Calculate it and put it to machinery account. And give depreciation on the remaining assets and close everything. Where will you give depreciation on the remaining assets? In provision for depreciation account. Done. This is the case where you are not maintaining machinery disposal. Next comes the case where you are maintaining machinery disposal. This is the easiest of all. Okay. Now what you will do is for the purpose of sale, whenever you are selling a machinery, in the first method, what did we do? All that entries we were hitting it in machinery account only. Here what we'll do is for selling only we are opening one new account. Okay. Now what will happen? Let's create the steps. First step, give depreciation till the date of sale. Where will you give this? In provision for depreciation. Same thing. Step 2, money you have received. This you will not put it in machinery account. You'll put it in machinery disposal in the credit side. Money received. Next, you'll calculate profit or loss on sale. Profit, if it comes, it will come in the credit side of the machinery disposal account. Now we are not touching machinery account. Profit comes in the credit side. Loss comes in the debit side of machinery disposal account. Loss comes in the credit side and profit comes in the debit side of the machinery disposal account. So that is done. Bank came, profit came. Then now the thing is, here one more problem has happened. In one case, we were doing all this in machinery account. Provision for depreciation was separate. Here, provision for depreciation is separate. Machinery is also separate. So what do you have to do? Go to provision for depreciation. See what is the accumulated depreciation of the asset that you have sold. Transfer it to machinery disposal account. Aita? Then go to machinery account. You have the cost component in machinery account. So whatever you are selling, take the cost component of the machine that you are selling, transfer it to machinery disposal account. Machinery disposal. Everything came to machinery disposal. Bank entry came in machinery disposal. Profit or loss came in machinery disposal. Provision for depreciation from here went to machinery disposal. The cost component also went to machinery disposal. The account will be automatically closed if you put everything. That's all. In the other case, everything we are doing in machinery account, in the end, the depreciation component of the sold machinery, we will transfer it to machinery account. Simple. That's all, guys. That is all your depreciation chapter is. Okay. Now we'll take that example. Okay. Before break. ಈಗ 10% ಇರೋದು 10% ಮುಗಿಯೋಷ್ಟರಲ್ಲಿ ನಮ್ದು ಪ್ರಾಬ್ಲಮ್ ಮುಗಿಬೇಕು. ನೋಡಿ, ಬರೀ ಎಕ್ಸಾಮಲ್ ಪ್ರೆಷರ್ ಇರಲ್ಲ, ಇಲ್ಲೂ ಪ್ರೆಷರ್. This 13th one. No? On 1st April 2018, a firm purchased a machinery for 2 lakh. Okay. Then on 1st October in the same accounting year, in 18 only, additional machinery costing 1 lakh was purchased. One more machinery was purchased. On 1st October 2019, next year. Okay, in the next year, they purchased the machinery purchased on 1st April 2018. That is this machinery which became obsolete and it was sold for 90,000. Which machinery are they talking about? The first one. On October 1, 2020, adru next year, again new machinery was purchased for 250, while the machinery purchased on 1st October 18, andre second machinery of 1 lakh was sold for 85,000. The firm provides depreciation on 10% annum on original cost basis, andre SLM. In SLM, they have given percentage, what you have to do? Every time you have to apply the percentage on cost on cost, not on the return on return. Show machinery account, PDD and depreciation account for the period of 3 years. Okay, so now here they are maintaining PDD. So which method are we following? Machinery disposal other than machinery disposal?
Other than.
Why not machinery disposal? They would have asked. Okay, so here they are not asking. So we are following other than machinery disposal. So let's solve. First they have asked machinery account. Date. Okay. So, what is the better way to solve depreciation problem is before starting do one working note. Do all the calculations first hand, then you start with the account so that it will help. Okay. So let's put working note. Calculation of depreciation and profit or loss on sale. Okay. So particulars. Now which are the machineries which we have? The machinery which we purchased on 1st April 2018 we have. Then 1st October 2018 in the same accounting year. So 1st October 2018 we purchased. One more. 19 machinery purchased. On October 2020 we purchased. One more. Anything else? That's all. Now, what is the cost of these three things?
2 lakh, 1 lakh,
2 lakh,
1 lakh,
1 lakh.
250. 250.
Now they asked for 3 years. Which 3 years? 21 ending 3 years andre 2021, 1920, 1890. 3 years. Year ending 19, year ending 20, year ending 21 for 3 years. Now, depreciation for 1890. Okay. How much is the rate? 10%. So 2 lakh into 10%. This is purchased on 1st April only, so full year depreciation. So how much? This one, it is purchased on October, so only 6 months. So
5,000.
5,000. 1 lakh into 10% into 6 by 12. This is not yet purchased only, so leave it. So value carrying amount
1 lakh 80,
80,000. 1 lakh.
95.
1 lakh 80, 95. Okay, next depreciation for
1920.
you'll apply the percentage on cost only because SLM. So 2 lakh.
So the first April.
And then nonsense. Depreciation for 1920. But here what has happened? The first machinery is sold on
First April.
1st October. Hey, no doubt. It is sold on 1st October 2019. That means this is which year? In 1920. In the next year we are selling. But what we have to do? We have to give depreciation till the date of sale, October, and then depreciation for 6 months. So for this machinery, it is 2 lakh into 10% into 6 by 12, which comes to
10,000.
I've given depreciation till the date of sale. So again, carrying amount came to
1,90,000.
this machinery is further sold for
90,000.
that means loss or profit.
Loss.
Full loss or 80,000 loss or loss. This is loss. Okay. Then what about this? This is sold next year. So for this full depreciation. So 1 lakh into 10%. This when did we purchase? This we have purchased in 11020. So still we have not yet purchased this. So the carrying value of this is 95 minus 10. It became 85,000. Then depreciation for 2021. In 2021, we made one more sale. No? On 1st October 20, new machinery was purchased. When the machinery purchased on 18 was sold for 85. Now this is also sold in October. So only 6 months depreciation. So how much? 1 lakh into 10% into 6 by 12. Your carrying amount became
80,000.
80,000 rupees, but it was sold for
85,000.
full profit. 5,000 is profit. Then this machinery is purchased on 2 lakh. 2 lakh 50 is purchased on 110. So that means again 6 months depreciation to 2 lakh 15 to 10% into 6 by 12.
12,500.
Done. So we have calculated the depreciation, profit or loss, everything. First, even in exam, do it like this. First, finish off this calculation. So you'll have clarity as to what to do. Now, first thing we have purchased. So for purchase, what is the entry? Huh? Walking. It is already there in your notes, Nada. Same question. Huh. So the first one on 1/4/18 to bank account
2 lakhs.
2 lakh we purchased. Then in that year, anything we purchased? That's all. Then additional, correct. One more thing we have purchased. 110 to bank account 1 lakh. That's all. Then depreciation will not come in this account. Okay, nothing will come. So we close this account in the end of the year. Huh? 31 390. Nothing will come here, so close it off. By account closed. But we have to give depreciation for this year. No, that will be given where? In provision for depreciation. So provision for depreciation has a credit balance. So what is the entry? Depreciation account debit to provision for depreciation. So it will come in the credit side. So 31,390 by. How much is first year depreciation? Come here, aram se. 20 plus 9, 25. Okay. This is also a liability natured account, not liability natured account. So this will be carried forward. So to balance carried down 25. So done. Next year. Next year, what did we do? First carry forward the balance. 1, 4, 20. So 90. 2, balance bought down. It is 3 lakh. Then any other purchases? You have sale, no purchases. Huh? Okay. Now, whenever sale comes, step 1. Please provide depreciation for the machine that you are selling till the date of sale. So when is the date of sale? 1st October 19. Please give a depreciation will be given here. My bad. So depreciation will be given in provision for depreciation. So carry forward the balance by brought down 25,000. First give depreciation till the date. How much is the depreciation till the date?
10,000.
I'm telling only for the machine that you are selling. So which is the machine that you are selling? First one. So depreciation till the date of sale is 10. So by depreciation, first step done. Second step, sale entries. Whatever money you would have received, the bank, it will come in the credit side of the machinery account. By money, how much money did we receive? 90,000 we have received. Put it off. Next step, profit or loss. Here what do we have? Loss comes in the credit side. So 1, 10, 90 by loss on sale. 80,000. Everything we did, but only thing is the depreciation is Papa separate. We'll bring it here. So now I want to know what is the accumulated depreciation that is lying in this account with respect to the machine that I have sold. Simple. Go to the working note. What is the total depreciation you have given till now? 20 plus 10 you gave just now. So total accumulated depreciation is 30. Transfer 30 to machinery account. So provision for depreciation has credit balance. So transfer it debit. So when on 1, 10, 90. Where are you transferring to? Machinery account. 30,000. What is it? The depreciation that you have given till date to that machinery that you sold. So it will come here automatically. If there it is machinery has come, it will come here. So 10, 19 by provision for depreciation account. 30. Ashte. Done. You're done with sale entries. Next, please give depreciation on the remaining assets. That you'll give on the remaining assets when at the end of life. So by depreciation, come here. So we are in 1920, 10 already given. So remaining is 10. So 10,000. Done now. So how much is the balance?
45.
2. Balance carried down 15. Okay. Next, third year. Again we have a purchase, but we don't have space. ಇದು ಸಿಲ್ಲೆಲ್ಲ ಹಾಕ್ಬಿಡೋಣ. So again next year. Hey, did we close machinery account? No. Let's close machinery account. So how much is the balance?
1 lakh.
By
balance carried down.
How much? 1 lakh. Huh? Now, if you see, one common thing is in machinery account, depreciation will not hit. So it will be maintained always at cost only. Now you tell me, as of this point, out of 3 machineries, which one do we have? First one sold, third one we have not yet purchased. So machinery that we have is
Second.
the cost is
One.
balance is
One.
stay because it will be maintained at
Cost.
cost only. Houseful. Huh? So done. So we close this thing. Okay. Next year. 1/4/22. Balance brought down 1 lakh. Aita. Then any purchase? Yes. On 1st October 20 we have purchased 2,50,000 worth. That's it. Then we have sale. Whenever sale starts, first thing depreciation till the date of sale. That we will give it here. So carry forward the balance. 1/4/20 by balance brought down 15. And depreciation till the date of sale. 1/10/20 by depreciation. How much is the depreciation till the date of sale?
5,000.
Second machinery, see here. In 2020 here. So how much? 5,000. So 5,000. How did you come to know? All of you came to know, no? In 2021 we have given depreciation till the date of sale. Now we give this. Second, all the sale entries which will come here. First bank, how much? Bank 85. Then we have profit will come debit side. 2 profit on sale, which is 5,000. So sale entry is done. Then depreciation on the remaining. One more thing. What is one more step? The depreciation is lying in provision for depreciation account that I have to transfer it to
Machinery.
So how much depreciation is accumulated with respect to second one? 5 plus 10 plus 5. It is 20. So transfer 20 to machinery. So it will come debit side. 2 machinery account 20,000. So it will come this side. 1/10/20 by provision for depreciation 20. So done. Now give depreciation on the remaining assets. 31 321 by depreciation account. ಈಗ ಇದೊಂದೇ ಮೆಷಿನರಿ ಉಳ್ಕೊಂಡಿರೋದು. ಅದ್ರ ಮೇಲೆ ಡಿಪ್ರಿಸಿಯೇಷನ್ ಇಸ್ 12,000. So 12. Okay, done. How much is the balance?
12,500.
Oh, hey, I'm talking about for this 12,500. See, it's so evident. There is only one machinery, and the accumulated depreciation of that machinery is 12,500. And without calculating, tell me how much will be the closing balance of machinery account? 2,50,000, because that is the only machinery pending. So even if you calculate that much only, you get. By balance carried down 2,50,000. Done. Now we still have depreciation account. That is simple only. How will we do depreciation account? Depreciation account. Where and all we have touched depreciation account in PDD account. So go to depreciation account. Here go to PDD. Here depreciation is credited. In depreciation account it will be debited. How much? 25. Later it will be transferred to P&L. Again next year 10,000 will be transferred to P&L. Again next year 10 plus 10 plus 10 20 will be transferred to P&L. Here 5 plus 12,500 17,500 will be transferred to P&L. That is simple. That I think is okay. So done, huh?
Yes.
Any doubts, guys? Anything to be done from depreciation? Can we go to the next one? Let's go to the next one post break. It's 10:20. Post break we'll continue with bill of exchange. Then what do we have? ಇನ್ನೊಂದು ಯಾವ್ದು ಇದೆಯಲ್ಲ ಇನ್ವೆಂಟರಿ ಆಯ್ತು rectification ಆಯ್ತು BRS ಆಯ್ತು all we are only pending with bill of exchange from the small parts. Should we continue? Close the door. Let's continue. Okay. Now, what you have to do is there is one question appearing in your screen. Can you see it?
Yes.
I want you to solve this question. You have exactly 10 minutes. This is relating to inventory. Again, one of those questions which I see will come in exam. It is repeated only. See, in the question they have just asked you the net profit, that's all. The adjusted net profit and the value of stock. They have not asked any accounts or as such. Okay. And if you can see how many times it has come. MTP, May 24, November 22. Many times, June 23, many times there was. Correct. But ಅಸಲಿ ಬಂದಿರೋದೇ ಮತ್ತೆ ಬರ್ಬೋದು ಅಂತ ಹೇಳ್ಬೋದು. ಇದೇನು ಹೊಸದೇನೋ ಅಂತ ಕೊಟ್ಬಿಡಲ್ಲ most of the times. Something from what you already have. Only there. Zoom up. It is already fully zoomed. ಇದನ್ನ ನೀವು ಯಾರಿಗೆ ಹೇಳ್ಬೇಕು? ಯಾರಿಗೆ ಹೇಳ್ಬೇಕು? ನಮ್ಗೆ ಹೇಳ. ನಾವು ನಿಮ್ ತರ ಬಂದು ಹೇಳ್ಕೊಟ್ಬಿಟ್ಟು ಹೋಗೋದಷ್ಟೇ. ಕಾಣಿಸ್ತಿಲ್ವಾ ನಿಜವಾಗ್ಲೂ? ಏನ್ ಮಾಡೋದು ಇವಾಗ? However, same question is there in your material also. ನಾವು ಡಿಸ್ಕಸ್ ಮಾಡ್ಬಿಡೋಣ ಬೆಸ್ಟ್. ಹೇಗಿದ್ರೆ ಯಾರಿಗೂ ಕಾಣಿಸ್ತಾನೂ ಇಲ್ಲ. ಕಾಣಿಸ್ತಾನೆ ಸುಮ್ಮನೆ. Let's discuss it off. You tell me what to do. Now what has happened? If you see, there are different points here. 5 points are there, which are errors. Okay, because of which your profit will be wrong. Why? Because if you have committed errors, then whatever result that you have got in profit and loss, will that be correct?
No.
So it is wrong. So what we have to do is, they have given us the profit. Given profit is 7 lakh. 8 lakh. After considering the closing stock is 7 lakh 50 and profit is 8 lakh. Now what you have to do is, you have to give effect to all these 5 errors and have to find out the correct profit and correct closing stock figure. What they have given is wrong because of the below errors. Simple. That is all we have to do. Okay. One by one. Now we have to think, how will this affect profit? Okay. Now, and one more thing which I've already told in the beginning of the class, closing stock is directly proportionate to profit. That is there. Okay. Keep that in mind. So first one, purchases for the year included 30,000 paid for electric fittings for the shop. So this is what kind of error? Principal error. See, electric fittings they have purchased, they should have capitalized, but they have put it in, considered it in purchase. Now what I have to do? Remove it from purchase and put it as asset. Correct? Now tell me, if I'm removing it as removing from purchases, what is happening to purchase? Purchases decreasing. Now what effect will this be having? Will this be having on the profit?
Increase.
Since expense is decreasing, your profit will increase. So this one, what will I do? I will add. Okay. This one I will add. So we'll write down here. So profit as given is rupees 8 lakh. Then since purchases, have to remove it from purchases and capitalize, purchases, expenses decreasing, your profit will increase. So electric fittings considered as purchases. So rupees 30. I added. Next. Messrs. Dheeraj gave away goods valued 80,000 rupees as free samples, for which no entry was made in the books of accounts. So tell me, what is the entry if you give away something as free samples? Advertisement account debit to purchase. Now advertisement is what? Expense. Expense increasing, advertisement debit. Purchases decreasing, expense decrease. Expense increase, expense decrease. What effect will this be having on the profit? Nil. So what will you do? Nothing. Nil. So next, nil. Goods gave away as free samples. The effect is nil. Why? Because advertisement expense increased, purchase expense decreased. Will this have any effect on profit? No. Expense increased, expense decreased. So nil. Next. Invoices for goods amounting to 5 lakh have been entered on 27th March 2024, but the goods were not included in stock. Now what has happened? There was one purchase, which you have considered it as purchase. Correct, no doubt. But that has not come in closing stock. So should it come or should it not come? It should come. Now, if I include it in the closing stock, what will happen to profit? Increase, because closing stock is directly related to profit. So I have to add closing stock not included. How much is that purchase? 5 lakh. Pakka 5 lakh. So 5 lakh. Then in March 24, goods of 4 lakhs sold and delivered were taken in sales for April 24. So what is this? Goods of 4 lakh is sold, delivered, but were taken in the sales of April. So tell me guys, sales is booked there, where? In April. That means as on March 24, where it should be? Just think about it. Sales is happening in the next period. Correct? No, that means in this year it should be where? In closing stock. No, I told goods should either be in sales or in closing stock. Right now, as of this current year, what will you do is that? Eating idli. So, what will you tell me? Closing stock. So April 24 only sales. I have told you if there is goods, either it should be there in sales or in closing stock. Here what has happened? This goods is sold in April. That means in current year it should have been in closing stock. But is it there? See, it is not there. What I have to do? Include. If I include, what will happen? My profit will increase. So wait. No. Sorry. Goods is sold only in March, but taken as April, which is wrong. I have to take it as sales in March. So what will happen if you take it as
minus?
your sales will increase. What will happen to your gross profit? Yes, gross profit will increase by how much? Think about it. Just imagine your trading account. You have everything. This sales you had not included. You will add it to sales. Immediately when you add it to sales, what will happen to gross profit?
Increase.
It will increase, of course. By how much? Exactly by the amount of sales only. No? Because imagine your trading account. Sales increased by 4 lakh means GP is increased by 4 lakhs. So plus sales included in sales made in March, considered in April. How much is sales?
4.
It is 4 lakhs. So it is by mistakenly considered in April. You are considering it this year. So sales increased, to that extent profit also increases. Exactly. Okay. So next. This is done. Goods costing 1,50,000 were sent on sale or return in March 24 at a margin of 33.33% on cost. Though approval was given in April, these were taken as sales for March 24. See, what did I tell you about goods sent on approval? It should, until acceptance, okay, you should not book the sales elements. Here, when did we get the acceptance?
April.
In April. That means, as on March, what should happen? Should the sales be booked? No. But what they have done? They have booked it up. So what we have to do? We have to reverse it. When you reverse, what will happen? Your sales will decrease by how much? 1 lakh. It is goods costing 1,50,000. But sales will be booked at sales price. So how much is the sales price? 1,50,000 plus 33.33%. 1,50,000 is also cost only. Goods costing. Okay. So this percentage can be applied only on cost. And 1,50,000 is what here? Cost only. So how do you know? They only give goods costing 1,50,000. So 1,50,000 plus 33.33% is 2 lakh. Right? This 2 lakh sales is already included in our sales. But since approval is not given, what we have to do? Profit also will decrease by that much amount only. Then what you have to do? Increase your closing stock. If you increase closing stock, you increase closing stock by how much? You increase closing stock by how much? Only by cost, no? How much is cost? 1,50,000. So what will you do? Decrease sales by 2 lakhs and increase inventory by 1,50,000. So for 2 lakh, what will happen? Gross profit will decrease by 2 lakh. Again, for increasing closing stock, it will increase by 1,50,000. So minus 2 lakh. So minus sale made on.
Can't we put the gross effect?
We can, but for your better understanding, I am doing it. Which is in which method will you understand better? This only knows. Sales reduced.
Closing stock in.
The sales one. See what are we doing? We have not received the approval. But we have booked the sale. So what we have to do? Reverse it. So sales reverse to reduce the profit by 2 lakhs. Sales amount is 2 lakhs. What did I tell in sale on approval basis? Now I told you either something should come in sales or closing stock. Now in approval basis, what happened? I reversed the sale. Because I reversed the sale, where should that goods come? So I'm adding it. Correct now. If I reverse it from sales, then where is closing stock? In Hawa. Not there in sales also, not there in closing stock also. Not correct. So I removed it from sales, included it in closing stock. So remove from sales rupees 2 lakh because it will be at sale price. Then include it in closing stock. Goods lying with whom? With customers, no? Because she has not yet given approval. But that is my goods only. But it is not there in go down. It is there in customer's place. So I'm adding 1,50,000, which is the cost. Done now? That's all. Now see what is the adjusted net profit.
1,68,000.
16 lakh
16 lakh 80,000.
So adjusted profit is 16 lakh.
80.
Correct? Huh?
Yes, sir.
So it should be 16 lakh 80,000. Correct. Then they have also asked this. The adjusted closing stock. Now, closing stock as given is
7 lakh.
7,50,000. Now, because of the above, where and all we have touched the stock, you tell me. In the first, we did not. Second, no. Third, yes, we have considered the closing stock was not included, we included it. So, closing stock not included. How much?
5 lakh.
Then where did we touch closing stock?
4 lakh. So 1 lakh.
This is not there. Here, not there. Here. We again added 1,50,000 goods lying with customers. It is how much? Rupees.
14 lakh.
1,50,000.
So how much is your total clothing stock? That's all.
14.
It is
14 lakh.
12, 50, 13, 14 lakhs. This is your updated clothing stock. Simple, huh? Anyone who did not understand this question? Second subdivision. Which one? Advertisement. See, what was the entry that you passed for advertisement? Goods issued as advertisement and the free sample. Okay, what is the entry? Advertisement account debit to purchase. Now, what is advertisement? Expense. It is increasing. That's why I have debit. Expense increased, debit. Then purchases is what? Expense. Since it is decreasing, I have credit. Expense increased, expense decreased.
No effect.
Any effect on the profit? See what happened now. Now, if you want me to explain it, why the nil effect is coming, your profit is somewhere around 8 lakh. The only thing what you have done is, instead of putting it as advertisement, you have put it as purchase. Now, what did you do? From purchase, you removed and put it as advertisement. Because of this, profit will change. Both are expense only. No? As a one mistake, what you did, instead of showing it separately as advertisement, you had included it in purchase. Is it the profit in exchange? Profit won't change.
Purchase कम आएगा तो डोरेंट
Advertisement जास्त आएगा. Profit will not be affected. That's why the effect is nil. We're just doing the classification change. Profit is untouched.
closing stock will be.
No, why? See, you're giving away. You'll either sell it or you're giving away a free sample. That will, however, be taken care of. When you go count the closing stock, however, it will be less. That is okay. Correct? Huh? That is not touched. The only thing is you had not recorded this transaction. Okay, which you recorded now. So, do you think it affects closing stock? See, what was the error? You have given away some goods as free samples, which you have not recorded. You recorded. Alva? Closing stocking effect. The closing stock will directly go count and you would have put. However, that closing stock will not be there because you have issued it. That amount is still correct. Correct? No? So closing stock will not be affected. Clear? So I think, see, this also they have asked in one attempt in December 21. What is this? Perpetual inventory system, WAM and the perpetual inventory system. Huh? So don't ignore. Rest all we have already covered in our material. Okay. So let's come to depreciation Any crazy question? Okay. Can you see this question? This question was asked in June 2023. Small question, but for 10 marks.
This was there for the test also.
It was there. Which test? He said.
What ma'am gave.
It
took on same thing.
Then solve it. Change ಮಾಡೋದು ಇವಾಗ ಇದಕ್ಕೆ. You take the photo. Discuss ಎಲ್ಲ ನಾನೇ ಮಾಡ್ತೀನಿ. Exam ನಾನೇ ಬಂದ್ಬಿಡಲ್ಲ. ಎಲ್ರದ್ದು ಏನಪ್ಪ ಮಾಡೋದು? ಸ್ಕ್ರೀನ್ಶಾಟ್. ಇಲ್ಲ ಇದು PDF ಶೇರ್ ಮಾಡೋಕ್ಕಾಗಲ್ಲ. ಒಂಥರ ಲಾಕ್ಡ್ ಆಗಿದೆ.
ಡಿಸ್ಪೋಸಲ್ ಮಾಡಬೇಕಾ?
ಅದು iPad ಅಲ್ಲಿ ಇದೆ, ಅದನ್ನ ಅದಕ್ಕೆ ಸೆಂಡ್ ಮಾಡಿ. ಅದೆಲ್ಲ ಮಾಡೋಷ್ಟಲ್ಲಿ ಅಂದ್ರೂ ಬಂದಿದೆ. ಬಂತಾ? ಫೋನ್ ಇಲ್ವಾ? ಬೇಗ ಬೇಗ ನಾವಿನ್ನು ಬಿಲ್ ಆಫ್ ಎಕ್ಸ್ಚೇಂಜ್ ಮಾಡಬೇಕು. ವಾಟ್ಸ್ ಫಸ್ಟ್ ನಾಟ್ ವಿಸಿಬಲ್. ಹೌ ಕಮ್ ನಾಟ್ ವಿಸಿಬಲ್? ವೆರಿ ಕ್ಲಿಯರ್. ಕ್ಲಿಯರ್ ಆಗಿದೆ. ಬೇಗ ಬೇಗ ಬೇಗ. ಈ ಗ್ರೂಪ್ ಅಲ್ಲಿ ಇಲ್ವಾ?
ಟೈಮಿಂಗ್ಸ್ ಇದ್ರೆ ಗೊತ್ತಾಗಲ್ಲ.
Try. See, I can directly start with the discussion, but I want you to try because you'll understand what you are lacking. So it's a simple question for 10 marks. Crazy. See, the best way you can increase the possibility of passing this examination is by solving more and more different questions. Somehow find the source, something like this or something. Solve more and more questions. Because they'll not give something very new. That is the trick. ಎಲ್ಲಿಂದಾನು ಒಂದ್ ಕಡೆ ಎತ್ತಿರ್ತಾರೆ. Okay. Anybody done?
So what should I put it? All the balances. All the
Machinery account balance.
1,63,800.
Then
Machine.
PDD?
I'm doing that.
No. Then you're asking which one I should try.
No, I'm asking you, should I tell you everything at a time or?
So all of you tried,
Last
2 minutes. Last 2 minutes. Okay. Such a simple question, but so crazy.
So, machinery balance 14,80,000. Depreciation.
PDD?
PDD balance. 1,80,000.
Next.
Balance. 5,16,300.
5 lakh?
16,300.
Uh-huh. ಮಾಡೋಣ ಫ್ರೆಂಡ್ಸ್ ಇನ್ನು 5 ನಿಮಿಷ ಓ ಅಷ್ಟೇ
So, when you're using machinery disposal account, you shouldn't take the same transaction also.
No, but one more thing you have to do.
Depreciation.
Take in machinery, what component is there? Cost component is there. That you have to transfer it to
Machinery disposal.
We have to do disposal.
yeah. Oh.
Sure.
Shabash.
Disposal is not done. Sure.
First part ಏನು ಕ್ವೆಶ್ಚನ್ ನ ಕರೆಕ್ಟ್ ಆಗಿ ಏನು So we'll start this. So first, they have given us machinery account. Then they want us to prepare provision for depreciation account. Then they want machinery disposal also. Okay. So what is the opening balance they have given?
12.
The opening balance will come which side? So date
21/4/21.
1/4/21. 2 balance brought down.
12.
12. Okay. Then what is the opening balance of PDD? by balance.
4,60,000.
I hope you know PDD has credit
Credit
balance.
balance.
4,65,000. Then what we have done? We have done one sale transaction. Then we have purchased one machinery. Purchase will however come here only. When is the purchase made?
First,
1,225.
Two.
Back.
How much?
4,80,000.
Now we have sale. So whenever sale is there, we have to come to working note. Calculation of depreciation plus profit or loss on. No. So particulars. So we have one machinery which is purchased on 1/4/18 only. Okay. And one more is we have purchased now 110. So that will come later. Now you have to understand what is the problem. If you see here, the machinery account balance is 12 lakh PDD. It is opening, both are opening balances as on 1/4/21. But this machinery is purchased when? 18 only. Do we know what is the carrying value of this amount, this machinery? No. So that we have to
Find out.
find out. So it is purchased on, the machinery costing is 2 lakh. So what you will do? So cost
20,000, 18,000, 16,200,
2 lakh.
7,290.
So till date you give depreciation. We are in 21/22, no?
Ah,
So 18/19 depreciation.
20,000.
Then WDV, yeah?
W.
Then
18,000.
how much?
18,000.
Then
1,00,000.
then
16,200.
6 months.
1,45,800.
and in 21/22 we are selling, so only half month. I mean half year.
7,290.
7 to
90.
13
510.
138,510. It is sold for,
1,10,000.
so loss is,
28,510.
so this calculation is done. No. Now, whenever sale is there, first thing what you have to step one, give depreciation till the date of sale. How much? So when is date of sale?
October 1st, 21.
So only on that machine that you are selling, you have to give depreciation only on that. So by depreciation account, how much is it? 7,290.
So until the date of date of sale, wouldn't the provision, depreciation be piled up in the this thing?
Yes, that's why in the later we'll take everything and put it to disposal account. No? So first step you give depreciation. Second step the bank entries. So since they have asked us to maintain machinery disposal, all that entries will now come in machinery disposal account. So come here. Okay. So on 1/10/21, first the bank entry will come. By how much did we get?
1,10,000.
Second step, find out profit or loss on sale, which we have found out. How much?
Loss.
Loss, which will come this side. So this also will come here. 2. A loss occurred. Correct. Agat. By loss on sale,
28,510.
28,000.
510.
So loss we have put, bank we have put. Then the thing is, PDD is there in a separate account, and cost is there in a separate account. That have to bring it to machinery disposal. So in PDD, the total depreciation will be there. How much is the total depreciation that I have given till date? 20, 18, 16, 17,
61,490.
61.
490.
So that I will transfer from where? PDD. 110, 21. 2. Machinery disposal. I'll transfer it to disposal account. How much? 60.
490.
So this will come here. By provision for depreciation. Still 61. Then cost component have to be. How much is cost component? 2 lakhs. 2 lakh is the cost component. It is here. From here I'll take it to disposal. By machinery has a debit balance, that's why I'm crediting. PDD had a credit balance, that's why I'm debiting. So by machinery disposal account, 2 lakh is the component. Because only cost will be there, no? Depreciation is being maintained in a separate account. So to machinery account, 2 lakh. Now see, if you have done everything correctly, this should automatically match. Is it matching?
Yes.
Right. Next, we are done with all the sale entries. Now what you have to do? Give depreciation for the remaining. But the question is, how much is the remaining? Yeah, because we are following which method? WDV method. So again, come back. So first in the Varana. Working note 2. Carrying value as on 1/4/21 of machine account was how much? As given in the question only. See, if you see here, machinery is 12 lakh. This is 4,65,000. So what is the carrying value? Written down value. Here only no, 12 lakh minus depreciation. So written down value is how much? So it is 12 lakh minus 4,65,000. How much? 7 lakh. This is the written down value. Out of this, we have sold one machinery. Which one? 2 lakh one. So since this is the carrying value as on 1/4/21, to subtract from it, I have to take the carrying value as on 1/4/21. So tell me, what is the carrying value of 1/4/21 of this asset? 1/4/21 is right. 1,45,000. So remove that. WDV of machinery sold. See, you cannot take this value 138,510 because that is value as on 110. It is not comparable. No? Value as on 1/4/21, value as on 1/4/21 should be taken. So I'm excluding. So how much is WDV of machinery sold as on 1/4/21? 145. 800. So remaining
589.
589. Now this is the remaining machinery. On this, depreciation should be given for the entire year because this is not sold. Sold I removed it off. For this machinery, you'll get depreciation for full year. So how much is depreciation into
58,920.
10%? So it is 58,920.
920.
And we have purchased one new machinery, which is here. We purchased when? On 1 lakh. 1/4/21, which is how much? How much is the value?
4,80,000.
4,80,000. So it's purchased in mid-year.
Yes, sir.
So 6 months depreciation. How much?
24,000.
24,000. So plus, so total depreciation on remaining assets is
82,920.
58,920 plus
82,920.
so this much will go to
Profit or depreciation.
so in the end of the year by depreciation account 82,920.
920.
So we give depreciation on the remaining assets also. Done now? Everything done. Now just balance it off. How much is the balance of machinery account?
14,80.
By balance carried down 14 lakh Then P, provision for depreciation. $493, $720 na? Should be $493. Then machinery disposal automatically closed. That's all. Smooth. Correct, no? Understood? Any doubts? So now let's come to bill of exchange. And your RTP question is pretty simple only. Okay, that's why I took question from here. RTP is simple. I don't know why RTP is very simple this time. Correct, no? Now let's come to bill of exchange. So all of you, I hope you are good with bill of exchange. No problem. Correct? Now what we'll do is first, let's revise with the entries. Okay. And then we'll discuss accommodation, then we'll close it off. Okay. Now, entries. First, in bill of exchange there are three parties. Who are these three parties? So three parties. Let's understand the journal entries in the books of drawer. Okay. Now first, drawer drew a bill on. Let's say A and B. A is drawer, B is drawing. A draw a bill on B. Entry.
Bills receivable account debit to B.
Bills receivable account debit to B account. Then, once the bill is drawn, what can the drawer do? Three options he have. One, he can hold it till the maturity. So if he holds till the maturity and if he receives money, what is the entry? Received money. So bank account debit to bills receivable account. And second possibility is he can go to bank and get it discounted. So then what is the entry? Discount account debit to bills receivable account. Then once he has gotten it discounted with the bank, next thing what can happen is that guy will pay off the bank. It is honored. What is the entry?
No entry.
No entry, because that guy will pay to bank. No entry. If it gets dishonored, let's come to the first part. You are holding it till maturity, honored, dishonored. What is the entry? Ulta. Please account debit to bills receivable. Entry is ulta. You have got the bill discounted and then dishonor has happened. Now, the moment this thing happened, whenever dishonor happens, after bank discount, what? You should pay the money to bank. So to bank account. Then that guy should give you the money, the drawing. So debit drawing. B account debit to bank account. If noting charges is involved, add the noting charges to the same amount because you have to receive it from drawing and pay it to bank. Okay. Then third possibility, what he can do, he can endorse the bill. What is the entry for endorsing the bill? Transfer. You can. I hope you remember what is endorsement. I hope Negotiable Instruments Act. I have my bills receivable that have given it to my creditor, because of which my liability is decreasing. So creditor account debit to what is bills receivable account. My bills receivable is decreasing. Creditor's account debit to bills receivable. Now it got honored. No entry because they will pay to him. Dishonored. The moment dishonor happens, what will happen? I have to pay to creditor. So to creditor account. Huh? I have to pay to creditor. So to creditor account. Then I have to receive from my debtor. So B account debit to creditor account. Correct? Because immediately, the moment it dishonor happens, this guy should pay me B account debit. I have to pay to my creditor to creditor. Mr. B to creditor. Dishonor already. Okay. Now, if noting charge is involved, you have to add the noting charges to the amount. Just add it. In the first case, Andre, you are holding till the maturity, dishonor happens, noting charges is involved. Entry. First case, you're holding till maturity. Dishonor happened. What is the entry? Now, noting charges is involved.
Debit, B's account debit to noting charges account debit. This is our
Tamara.
noting charges.
Hey, ಹೇಳಿಲ್ವಾ ನೋಡ್ರಪ್ಪ. So for this you have to understand what is noting charges. Okay, noting charges ಅಂದ್ರೆ ಏನು? See this guy draw will be there. No, on the date what we have to do is, if you'll be knowing in your law, okay, on the date of maturity date also, what should drawer do? Should again present the bill, then only he'll give the money. On the due date also, correct? A presentment. He'll present, then he'll give the money. Sometimes what will happen? No, drawer will present. This guy drawer will not be having money, so he'll say that guy will not give money. Drawer will not give money, and drawer will go to court. Sir, that guy did not give money. Then in the court, drawer will say, sir, that guy did not present only. Hey, no sir, I presented. He'll be like, no, I did not present only. Problem. So that's why what we'll do is we'll do that presentment via notaries. So generally what we'll do, presentment will be done by drawer, but what we'll do is we'll ask notary to present. So if tomorrow something like this happens, no, notary will be the proof. Correct? He cannot, now drawer cannot say, sir, he did not present only. Then notary will come and say, no sir, I had only gone, I had presented. So this is called notary. Generally, in dishonor, we'll pay noting charges. Now,
Amount recovered by
now I'll tell you who should bear, who should pay. Now, noting charges is paid. See, two different things: incurred and paid. Now, noting charges is paid by the holder of the bill. At the time of dishonor, whoever is holding the bill, that guy will pay. Okay. Now, in case of first case where I'm holding the bill till maturity, who is holding the bill? Me. So, who would have paid the noting charges? Me. I would have paid because I was holding the bill. In case of endorsement, creditor will be holding the bill, so he will pay the noting charges. In case of bank discounting, bank will be holding the bill, so bank will pay the noting charges. But who should incur the noting charges? Idu payment ಆಗ್ತಿರೋದು. ಈಗ say this guy has drank tea, but he is paying. This expense is incurred by whom? That guy. Paid by this guy. Understanding the difference between incurred and paid. Now, noting charges is incurred by the person responsible for dishonor of the bill. Okay. Now, in this case, tell me who will be responsible for dishonor of the bill? B. That is drawee only, no? Because drawee did not pay, that's why he is responsible. Now, this noting charges is an expense for whom? Drawee, drawer, endorser. Drawee, because he is the reason for dishonor. Is it the expense of these creditors, drawer or something? No. So, what is happening whenever you are holding the bill? Since in the first case I am holding the bill, so what will I do? Since I am the holder of the bill, I would have paid, but it is expenses of drawing. So what I should do? I should recover it from him. So in the books of drawer, what will I do? I'll debit drawee again for the amount plus noting charges. 2. What is the entry for dishonor? You just noted. Bills. Debtors account debit to bills receivable. Debtors will debit for how much? The bill amount plus the noting charges, because you have to receive it from him. No, it is his expense. 2. Bills receivable balance is now no more. It is there. So 2 bills receivable to the extent of bill amount, because bills receivable was there only for bill amount. So 2 bills receivable bill amount. 2. Is it my expense? To put noting charge, it will become your expense. Why are you touching that? Then it will become your income. 2 is cash account. Why? Because I was the holder of the bill, I would have paid no noting charges. So it is to cash account. So what is the entry when noting charges is involved? If you are holding till the maturity, debtors account debit, bill plus noting charges. 2, bills receivable account to the extent of bill. 2, cash account, because I am holder of the bill, I would have paid. Okay, clear? Any doubts?
So when you pay the notary charges only, it would be notary charges to cash account.
No. The entry, the payment entry only I'm showing now.
You are not paid.
And that's a little advanced level of doubt, but I will solve it. See, when you pay the noting charges, entry will be noting charges to cash. If you have passed this entry, if at all, Then while passing the dishonor entry, you can credit noting charges. Then noting credit, noting debit, nullified. Okay. Understanding? First you have debited noting charges, it has become expense. But should it become your expense? No. So later, if at all, debited the noting charges, later while passing the dishonor entry, don't credit cash. Because cash credit you have already shown, credit noting charges. Because it should not be an expense in your books of accounts. Now what happened? In the dishonor entry, you credited noting charges, and earlier you had debited noting charges, nullified. If you have not passed that entry, then debtor account debit to bills receivable account to cash.
Sir, in some cases, that creditor will agree to pay the noting charges.
He'll agree. He has to pay. No option to agree.
Before he tells that you draw another bill, I will
It is renewal and all. And no matter what, guys, the moment dishonor happens, noting charge in the question, if they have told you pay noting charges, then this is the treatment. No matter what is happening, renewal or retirement or no matter what. Because even in renewal retirement, what will happen? The moment renewal is happening, their first bill will be cancelled. So there, this is the entry that you have to pass. Even if it is involved, question illa, but still. Okay. Then now in the second case where you have endorsed the bill, okay, now dishonor happens. What will you do? What is the dishonor entry in endorsement? Debtors account debit to creditors. And for noting charges, what will you do? Hey, in this case, here cash will not come. You'll just add the noting charges. Why cash is not coming? Because cash will be paid by holder of the bill. Who is the holder of the bill in case of endorsement? Who should incur? Troy. This guy. So what I have to do? Receive it from this guy, pay it to this guy. So that's why in receivable I will add noting charges. In payable also I will add noting charges. Same thing with bank discounting also. Who is the holder of the bill in bank discounting? Bank. Bank would have paid. Incurred by Troy. So I am not doing any cash. So I receive it from that guy, debtors account. Two, I have to pay it to bank. Debtors to bank. That's all. I'll just add NC to the amount. Two cash will only come in this case, where you're holding till maturity and then dishonor happens. Then only two cash will come, because in that case I am the holder of the bill. In other cases, I am not the holder of the bill, so I will not be paying. Clear? This is the accounting in the books of drawer. Let's come to the accounting in the books of drawing. So what would have happened? I'm drawing, someone drew the bill on me, I accept it. Now?
A account to bills payable.
Yeah, so my creditor is decreasing. So creditor's account debit to bills payable account. Correct? Then I paid off. Then
Bills payable to bank.
honored. That means bills payable to bank. If I did not pay, dishonored, then the entry pass should be reversed. What was the entry you had passed? Creditors to bills payable. No, reverse it. Bills payable to creditors. That is all about the accounting in drawing. Books of drawing. That's all. In other entries, endorsement and all will not affect this guy's books. Okay. Clear? So that is about your bill of exchange. Next, what do we have? We have renewal and retirement. I hope you know what is renewal retirement. Correct? No? Renewal means you're extending the bill. I thought, will anyone extend? Will the drawer extend the period for free? No. Of course, you have to pay interest. Similarly, in renewal, the drawer is paying off the money earlier. So since what did I say? Sorry. In retirement, what is happening? That guy, drawer is paying off the money early. Since he's paying early, we'll give him cash discount. Something like cash discount. Rebate or discount. Now, rebate is what? Gain to whom? Drawee. In case this discount or rebate is gain to drawee, and that interest in renewal is gain to drawer, because he's extending, he'll get the money. Correct? For him, it is for drawer.
Interest
income. For drawer, it is income, and in case of renewal, income is to the drawee. Clear? Vice versa to the others. That is about retirement renewal. Then we have mutual accommodation. Okay, you know what is mutual accommodation? Every time when we are drawing the bill, before drawing the bill, there is an underlying transaction. For example, first, say suppose if we both are the parties, I would have sold goods to him. A sold goods to B. B is supposed to give me money, because of which I will draw a bill. That is how we'll do. On the receivable irutte. For that receivable, I will draw a bill. In mutual accommodation, what will happen? Without anything underlying, they will draw a bill and use it for various purposes. Aita? Correct. Now I will draw a bill on it, but there is no underlying transaction. Now, why am I doing this? For short-term finance. Okay. Now what I can do, I can simply draw a bill on him. He'll accept it. I can go to the bank and get it discounted. I got money. Or what I can do, I drew a bill on him. Then he accepted. Then I can transfer this bill receivable to my creditor, so that he'll be silent now. So I'm using this for short-term finance. Correct? So this is accommodation of bills. Simply I'm raising the bill. Okay. Now we'll take one question about accommodation. Which question will we take? Accommodation only, yeah? Or we'll take something from here on. Seventh one. See question number 10. Okay, so this is one of the yeah, I think. Oh, ಮೊದಲೇ ಟಿವಿ ಸಿಕ್ಕಿದೆ. So okay, let's start. I don't. T draws on J a bill of exchange for 1,80,000 on 1st April 2022 for 3 months. Okay, we'll discuss entries then and there. So first T drew a bill on J on 1st April 22. What is the entry? Who is the drawer? Who is the drawer? T is the drawer. J is the drawer. We want journal entries in the books of both T and J. Okay. So let's first discuss in the book of T, drawer. Aita? First, bill draw ಆಯ್ತು ಏನಪ್ಪ entry? Bills receivable account debit to J 1,80,000, 1,80,000. Then next, 3 months. J accepts the bill and sends it to T. Either number, no entry for this because acceptance. That guy will have an entry. Who gets it discounted from his banker for 1,70,800. Now he got it discounted. What is the entry? With amount you have to tell. Bank account debit. How much did I get? 1,70,800. Remaining is what? Discount account debit 7,200. 7,200 to bills receivable account 1,80,000. Being bill got discounted. Next, T immediately remits 57,600 to J. See here they are doing accommodation. Simply they raise the bill, got it discounted, and they are sharing the money. Okay. Now how much did T give J? 50. Now what will be the entry? See, now two things we have to discuss. Now what they are doing in this transaction is they have went to money, got it discounted, and they are sharing the money. Now do you think the entire discount of 7,200 should be shared by should be borne by T only? Since T and J are sharing the money, the discount also should be shared among themselves. In what ratio? In the ratio of money utilized by them. Okay. Now tell me, out of 1,70,800 I got, if T has remitted 57,600, then how much has T has remitted 57,600 to J, then J is using 57,600. How much is T using? 1,15,200. 1,15,200 ಇವಂದು ಯಾರ್ದು ಜೇದು ಟಿದು ಎ
15,200 T.
ಇದು ಟಿನಾ ಇದು ಜೆ ಜೇದು
57,600.
So this is how they are utilizing the money. How much is the discount? Divide it in this ratio.
2,400.
So how will you divide it in that ratio? 7,200 into this guy's share is 1,15,200 divided by total money received 70.
2,800.
Okay. Then this guy's share
57,600 by 172,800.
so we divide it in that ratio. So how much is this guy's expense? 40? Huh? 4,800 and 2,400. Okay. Done. So how much is J's discount share? 2,400. T's is 4,800. Now come back here. Now what has happened? T has remitted 57,600. What is J's discount share? 2,400. So total money is 57,600 plus 2,400. How much? 60,000. So J should give me how much? 60,000. So J account debit 60,000 to
Bank.
bank. Okay. To bank account. How much did I give? 57,600. Again to discount. Why am I crediting discount? Because whenever I got it discounted, my discount expense is booked as how much? 7,200. It's wrong. Mine is only 4,800. So 7,200. Now I'll credit discount of 2,400. My net discount is 4,800. Did you see the effect? There it is debited while I got it discounted. Now while remitting, I have credited the discount. Net is 4,800. Now it is correctly booked in my book. So when I remit it to J, what is the entry? J account debit 60,000 after allocating his discount also. J account debit 60,000 to 57,600 to discount 2,400. Clear? I sent it. Next, what happened? On the due date, what is the due date? 3 months from 1st April 22. So it is May, June, July plus 3 days. 4th July. Correct? Huh? All of you know, I hope you know. 3 months is the term, 3 days is the race days. So it is 4th July, this thing, 2022. On due date, T being unable to remit the amount due, accepts the bill for 2,52,000 for 3 months. Now what happened? That guy, now what will happen? Now they shared the money. After 3 months, bank will come and ask whom? T or J? J. Okay, that guy has to pay to the bank, but will he have the full money? No, he has only 60,000, including his discount. Remaining 1,20,000 should be given by T. Then T should give 1,20,000 to J. Then his 60,000 is there. Add both, give it to bank. But this guy T, he did not give it. See, unable to remit. But did J give it to bank? See, about that, nothing they have told. So our assumption is J has given it to bank. Okay. J gave it to bank, but T did not give his share to J. T's share was 1,20,000. Clear? Now, for this, what happened? J. Now J has no money. Papa, he has paid off to bank, including T's share. So what did J do? J raised one more bill on T for 2,52,000 for 3 months. I thought, entry.
J.
Hey, here that guy raised a bill. I accepted now. J account debit to bills payable account. How much? 2,52,000. 2,52,000. Then J went to banker and got it discounted. So that will come in his book. I thought he has got it and he has gotten it discounted. How much is the discount? 11,340 is the discount. Now what happened? J went to ನಾವು ಒಂದು ಸ್ಮಾಲ್ ಡಯಾಗ್ರಾಮ್ ಹಾಕೋಣ. ಇಲ್ಲೊಬ್ಬ ಟಿ ಇದ್ದಾನೆ, ಜೆ ಇದ್ದಾನೆ. ಫಸ್ಟ್ ಟಿ ಡ್ರೂ ಅ ಬಿಲ್ ಫಾರ್ 1,80,000. This guy went to bank, got it discounted for 1,72,800. Okay. Then T remitted to J how much out of the money? 57,600 plus his share of discount is 2,400. That means my share of discount is 4,000. It is my share of discount. Okay. Then this guy T was supposed to pay 1,20,000. He did not pay, because of which J raised a bill on T for rupees 2,52,000. T accepted. Then J went to bank, got it discounted for how much? 2,40,660. That means total discount amount is 11,000. Will entire 11,340 to be borne by J? No. Aita? It should be shared in the ratio of money utilized by each of them. Now tell me, out of the money I received, 2,40,660, how much is utilized by T and how much is utilized by J? How much is utilized by, out of this money, how much is utilized by J and how much is utilized by T? You have to see the question now. See what happens out of the money received, J sends 40,440 to T. This guy sent how much? To see it, 40,000. Okay. Now tell me money enjoyed by T and money enjoyed by J in the second case. Now I'll tell you. See, how much did J send to T? 40,440 plus what was the money that was supposed to be given by T to J earlier? That he did not give. I thought that money is utilized by J now because J had earlier paid no, to bank. So now tell me that 1,20,000 is as good as used by whom? T only, no? T was supposed to give, he did not give. So the money is as good as enjoyed by T. ಇದು ಯಾವ್ದು ಇದು
ರಿಮೋಟ್
ಎಲ್ಲಪ್ಪ ರಿಮೋಟ್ ಹೋಗ್ಬೋದು ಸ್ವಲ್ಪ ಹೊತ್ತಾದ್ಮೇಲೆ ಹಾ. So J sent to T 40,440 rupees plus that 1,20,000 was supposed to be given by T, which he did not give. So as good as the total money enjoyed by T is, don't you think it is 1,60,440? That earlier 1,20,000 which he was supposed to give plus 40,440 sent now. This is the total money enjoyed by T. How much is J? How much is J enjoyed? Out of total 240, 660, 40,440 sent to T. Minus 1,20,000 is being used for the purpose of T. So remaining is 80. This is the money being utilized by J. Now divide this 11,340 in the ratio of this 1,60,440 is to 80 to 20. It is clearly 2:1.
7560.
I thought so. That means T share of discount is 7560 and J share of discount is Madrapa
567.
huh?
3780.
3780. So this is how we divide. Understood how money utilized by TJ? Clear? Now what happened in the question? J sends 40,440 to T. So what will be the entry for that? J sends to T and we are doing accounting in the books of T. So you would have received money. So bank account debit. How much money I received? 40 plus what is my share of discount? What is T share of discount? T share of discount is 7560. So to J, who sent me money? J. So J's account. It is 48,000 rupees. Okay. Then what happened? Before the maturity of the bill, T becomes bankrupt and his estate paying 50 paisa. Then he became bankrupt. Nonsense, fellow. All this. Now, whenever he becomes bankrupt, the bill is dishonored. Whenever bill is dishonored, what is the entry? Now this is the bill. Now which are the bill active? First bill only there. That is not done now. You know, we discounted it. That guy paid also. Gone. The second bill. Okay. This bill, I am the payer. Since who became bankrupt? T became bankrupt. This is becoming dishonored. So whatever entry you would have passed, you should reverse it. What is the entry you had passed? J2 bills payable you had passed whenever you had accepted that you reverse. So to J. How much was the bill amount that you had accepted for? 2,52,000. 2,52,000. So 2,52,000. Okay. Now what are the remaining balance? Whatever I have to pay, I was able to pay only 50%. Now how much is the balance? How to find out? There are many transactions. So best thing what you can do is you have to put a ledger account of who? J. So there you come to know how much balance you have to pay. Just put a small ledger account. J. Wherever J is credited, put in credit side. Wherever J is debited, put in debit side. All the entries you consider. The thing is, we did not write down all this. No one wrote it down. Huh? Okay, we'll see it from answer. So see in the first entry, J is credited. Someone write down the ledger. First J is credited. Okay, 1 lakh. J is first credited 1,80,000. Then again J is debited. If you can see here, how much? 60,000. J is debited for 60,000. Then again J is debited for 2,52,000. So then again J is credited for 48,000. Here credited for. Then again J is credited because of dishonor. That is 2,52,000. So what did I just do? I just took all the journal entries wherever J is debited, I've put it. Now tell me how much balance I have to still pay to J. I have to still pay 1,68,000. But am I able to pay it? I'm able to pay only half. So what will be the entry? J account debit. Total balance is 1,68,000. But I am able to pay only 84,000. Correct. First of all, this is correct. So it is remaining 84,000. What? Hey, you are paying, Noda. Why not? Profit, no. Hey, it is not the discount offered by that person. You are not able to pay because you don't have money. So it is deficiency account. We'll go to something called a deficiency. Okay. If you remember your dissolution of the partnership form, when all the partners become insolvent, where will money go? They don't have money to bring, so everything will go to deficiency account. That's why a deficiency account is coming. Okay. So this is the entry will pass. This is in the books of drawer. It's not dryer. Drawer. And I don't know. It's a dryer. So still we have in the books of drawing. So that I will not do. Okay. That you should. Will you do it? Will you do it now or will you do it later?
Later.
So then what we have to cover here? We'll see the RTP question once. Bill of exchange. Yeah, okay, we have a question on renewal. Okay, it is the same question again. The question on renewal. Okay, no dishonor and other stuff. Then any other problems which you want me to cover? Let's see any other crazy problems if we have. If not, we'll close it off. Okay, on small question, try it off. Then we go to the next one. 14. Answer. Cost answer. Okay, we'll discuss like that only. Okay. On 1st April 2024, X sells goods to Y for 25,000 plus IGST 18%. In the books of X break number. Okay. First, X has sold goods to Y plus IGST 18%. Now, what is the journal entry?
Y account.
Entry? Y amount. Y account debit.
25 plus 80%.
ಎಷ್ಟು? 29. So, Y account debit 29,500 to sales account how much? 25,000 to output IGST payable 4,000. Done. Next, two bill of exchange on him was drawn. The first bill for 15,000 for 2 months and the second bill for the balance. Okay, the first entry. ಈಗ ಡೌಟು GST ಏನ್ ಮಾಡೋದು? Amount
15,000.
the balance is 15. 15. First bill is drawn for only 15,000. So bills receivable account debit to Y account 15,000. Next the second bill will be for 14,500. So BR account number 2 14,500 to Y. So I can pass one entry. BR number 1 account debit 15,000. BR number 2 account debit 14,500 to Y account 29,500. Okay. Then Y accepts and return these bills. Okay. Both the bills are sent to bank for collection. They're sent it to bank. Whenever you send it to you send the bills to bank for collection. Now it will go to bill sent for collection. Bill sent for collection account debit 29,500 to BR account number 1 15,000. BR account number 2 14,500. Now you transfer the balances to bill sent for collection because you have sent it there. Then in due course, X receives the information from the bank on the due date of the respective bill that the bill for 15,000 has been duly met. First bill, we got the money. Entry? Bank account 15,000 to bill sent for collection. Because now the balance is there in bill sent for collection. So bank account debit to bill sent for collection account 15,15 bill honored. Then and the other bill has been dishonored. No, the other bill dishonored entry. The 14,500 is dishonored.
Y account to bill sent for collection.
Exactly. Correct. No. Now the balance debtor will again become payable. So Y account will become receivable. So Y account debit 14,500 to not BR because the balance is there in bill sent for collection. So Y account debit to bill sent for collection account 14,500. Noting charge is also paid on the second bill 300. What to do? Just add it up to the amount. No other ledgers will come. Who was the holder of the bill? See, technically in bill sent for collection, we are holder of the bill, so we would have paid it. So entry is. See, who is the holder of the bill? In bill sent for collection, who is the holder of the bill? I have just sent the bills for collection to bank. Have I discounted? So who is the holder of the bill till now? I am only the holder of the bill. So even if bank could have paid, I should pay to bank now. So the entry is Y account debit 15,500 was the bill. This is 500. 14,500 plus 500 15,000. So Y account debit 15,000 to bill sent for collection 14,500 to cash. I would have paid 500. Now it is done. Because even if I have sent bill for collection, I am only the holder of the bill. Okay, that's all. So anything else to discuss in bills of exchange? Can we go to the next one? Done, guys. We are done with all the Chota Mota chapters. Now let's enter into final action. Okay. Now, how to approach final action? Is the question.
Draw.
Huh?
Draw.
Yeah. That is, once we start solving, we'll do it. So before, what are the things that you should know? Is I'm thinking. Format and all, you know what I should tell format. So, okay, I'll tell some things about final accounts. Now, this final accounts, though it is one chapter for you, it is divided into three parts. Okay, first part is your final account for non-manufacturing entities and then trading entities. Then those entities which are just involved in buying and selling of goods. Then final accounts for manufacturing entities. Then non-profit organization. Then incomplete records. Oh, it's 4. This manufacturing I have considered as manufacturing, non-manufacturing. Okay, so these 4 things. So first we'll come to the non-manufacturing only. Say suppose we are trading. Trading and our only business is to purchase goods and sell goods. Now if you remember our cycle, journal, ledger, everything, we have now come to the final part where we are preparing trading and P&L. So as part of final accounts, what do we do? In final accounts, what all we do is the question. Okay. Till ledger, you remember everything. Okay. What all we do in final accounts? First, the ledgers, the individual ledgers. What did we do? We transferred it to hey, trial balance is just a paper. We did not transfer. Where did we transfer the accounts? If it were asset or liabilities, we transferred it to balance sheet. And by carrying forward the balance, and that balance should be taken to balance sheet. And for all the nominal accounts, we transferred it to P&L account. P&L. Everything we did. Ledger is done. Now imagine the next new format, trading account. Since we are traders, manufacturing account will not be there. It is non-manufacturing entity. The first thing we'll prepare is trading account. Now by now you know the trading account format. Here left side you have, debit side you have opening stock, purchases, direct expenses, gross profit. Credit side you have sales. Now, can something come to trading account just like that? No. In accounts, if something has to happen, it should happen via journal entry. Then how did opening stock come here? Have you ever thought about
Trading account debit.
We would have passed that entry. You know, anti-clockwise method of ours to find out journal entry. So see that only. So for opening stock to come there, you would have passed one entry. Trading account debit to opening stock account. You know this whole, anti-clockwise method. Imagine the ledger. The entries for the entries, if you want to find out journal entries from the ledger, always follow this anti-clockwise method. Okay. Entries can always be there anti-clockwise. Clockwise not possible. Say suppose take machinery account, depreciation will come which side? Credit side. By depreciation. What will be the journal entry? Depreciation to machinery account. If you have purchased machinery, entry will be machinery to bank. So it would have come in the debit side of machinery. How will you get the entry? Machinery to bank. Anti-clockwise. Clockwise not possible. Now apply the same thing in trading account also. How did opening stock come? You would have passed one closing entry called as trading to opening stock. Then how did purchases come? Purchases we had only transferred. How did gross profit come? You would have passed trading to gross profit. Then sales we had only transferred it to trading account. Closing stock we have to pass an entry. Closing stock account debit to trading account. You have to pass this entry, then closing stock will come. When will you pass this entry? You go down count and then pass this entry. So it will come closing stock to trading account. Okay. Then all other indirect expenses you have ever transferred. You transferred now from ledger. Where did you transfer? To P&L. So no entries to pass again. The transfer entry, because of the transfer entry only, it is coming to P&L. So you came to know about the format, no? So these entries which I told you, trading to opening, trading to purchase, all the ledger accounts coming to trading account or P&L account. These entries are called as closing entries. Okay, closing entry. Then in year end, what all entries we'll do? If there is any provision to do, we'll do provisions. If you have depreciation to give, we'll give depreciation. All this we'll do in the end and we'll close the books of accounts. Okay. Now, trading account. In trading account, you'll get only gross profit. In P&L, you'll get net profit. Direct expenses will come in trading account. Indirect expenses and gains will come in P&L account. Okay. Then comes the balance sheet. In balance sheet, asset side, liability side. In liability side, you have capital. Whatever profit is earned in the P&L account will go to capital. Okay. Then say suppose if the owner has withdrawn something, their money will be subtracted from the capital. Correct? Because his money is withdrawn, so capital account decreased. The drawings will be subtracted. Then what? Then what is the thing We discussed about provision for doubtful debts, no? Yesterday. So even if it comes, we'll see it in the problem. Okay, guys. We'll directly go to the problems, man. Nothing more to discuss. If there's anything to discuss during problems only, we'll understand. Which problem? Any recommendation? Ninth or? So this one we'll do, Bada bhai. Huh? Or we'll see what is there here. Okay, we'll take RTP question again.
Yes.
Okay. So already open up it. Here we have. So come on. So the given other question cancel. All of you can open RTP, yeah? Huh? May 20, September 23. Your attempt RTP, yes. Anyone who has airdrop, I'll airdrop if you want. Anyone has iPhone? You put it in the group. Martha. Hey, Anda. ನಂದು ನಂದಕ್ಕೆ ಹಾಕೊಂಡ್ಬಿಟ್ಟ ಬಂತ ಆಯ್ತಾ but it is very dangerous. By mistakenly, if you press others airdrop, it will go off. Then no coming back. But we have the option to accept. The tendencies people will accept. Okay, so gone. Why is it so hot here? Hot. ಎಲ್ಲ ಶುರು ಮಾಡೋಣ. See, if you remember in the first class that we did here in revision, you remember that flow we did?
Yes.
In that flow, we started preparing final accounts by looking what? Trial balance. Correct? No? Same thing we are doing here also. Okay. Now all your methods, so accrual, cash, whatever we have learned, no, everything will come to application. Okay, we'll see. All of you got the material, this thing. The following is the trial balance of Messrs. Thomas and Associates on 31st March 2025. One ನಿಮಿಷ. So Thomas and Associates on 31st March 25, they are given as a trial balance. Now first how to solve, in my opinion, is in trial balance only I'll start classifying. Okay, first only, just for our understanding. So you also tell me where it will come, balance sheet or P&L.
Balance sheet.
First, capital, drawings,
Balance sheet.
balance. So if you see, this is the opening balance, and these are the fixed assets purchased during the year on 1/10/24. So what you have to understand whenever you see something like this, for depreciation you should consider only 6 months because it's purchased on 1/10/24. Then opening stock will come in trading, purchase, returns,
Balance sheet.
fixed deposit is bank balance. Bank overdraft, suspense, suspense P&L. See what you have to understand about suspense account. See, why have they opened suspense account? Because trial balance was not matching. Why is it not matching? Because of one-sided errors. Okay, let's see if we can rectify, we'll rectify it off. Suspense account will automatically go. If it doesn't go, then we'll put it in credit side of the balance, liability side of the balance. Because right, it has a credit balance. Let's see if we can rectify it. Okay. Then rent for 17 months. So till 31/8/2025 they have considered. Yeah, it is P&L, no doubt. But tell me, as per accrual concept, whatever we have used in the period, that much should come as expense. Maximum we can use only for 12 months. Here, this people has paid for extra 6 months. So what is that extra 6 months? That prepaid. It's prepaid expense. Prepaid expense in the nature of asset. Why? Because I have not yet received the service, but I've paid off the money. It's like asset. I've paid in advance.
Balance sheet.
So balance sheet and P&L because it includes prepaid. Investments 12%, 1/8/2025. Yeah, why balance sheet and P&L?
Interest on investment.
So if you see, this is purchased on 1/8/24, and see, I have not received anything, the 12% is interest or income from that investment, but have I received that? No, but we follow accrual basis of accounting. I don't care for cash inflow or outflow. If I've earned the money in that period, I will book it off in my P&L. Have I earned this money? Yes, for 8, 9, 10, 11, 12, 1, 2, 3. 8 months income I've earned, but only thing is they have not given. They'll give it maybe next year. But the fact that I've earned is true, no? So I have to book it as per accrual basis. So even if you have not received, we will book it. So how to book it, sir? What is the entry? See, first thing you have to book this income. Okay. So income is increasing. So you will credit to income on investment. What will you debit? Money is not coming because they have not given. But money is not there, but receivable. The fact that they should give me is an asset. Receivable. So what will I do? Income receivable. How much? 18,75,000 into 12%. Whenever they have not told anything, percentage is for per annum. Per annum into how many months? 8, 9, 10, 11. 8, 9, 10, 11, 12, 1, 2, 3, 8. So it is
1,50,000.
1,50,000. So that is my interest that I have to book. So pakka we have not received. Sir, how to know whether we have not received or whether we have received? How to know? See, if you had received, you would have passed this entry. Correct? If you had passed this entry, this ledger would have come in trial balance. If that ledger is there in the trial balance, no. That means what? You have not passed the entry, you have not recognized, you have not received. Clear? Simple. So one thing what you have to understand from final accounts point is for trial balance. If something is there in trial balance, that means entry with respect to that is passed. That's why it is there in trial balance. Pass it would have not been in trial balance. So this one thing should always be in your mind. Then bank balance is a balance sheet. Stock on 31st March 25 was valued at. See, I've already told. Will closing stock come to trial balance? No. Only in one exception. If they have considered adjusted purchases. Correct. Here they have taken normal purchases only. So that's why it has not come. This will go to trading and balance sheet. Trading and balance sheet.
Exactly.
Depreciation is to be provided at 10%. In the last. Okay, enough. Depreciation is to be provided at 10% per annum on fixed assets purchased during the year. So that means, just tell me, have they already given the depreciation? No. If they had given, depreciation ledger would have appeared in trial balance. Is it there? No. So depreciation we have to give on opening balance also and on the addition also. For addition only 6 months. A scrutiny of the books revealed the following matters. So these four are what? Errors. Errors sari madidre mostly suspense account ideyala, that will go away. We'll see whether if it goes or not. Rupees 1,50,000 drawn from bank was debited to drawings account, but out of this question you had sent me, no, this only. 1,50,000 drawn from the bank was debited to drawings account, but out of this amount withdrawn, 90,000 was used in the business for day to day. So what has happened, guys? We have withdrawn some money from the bank under cash bandide. But what was the entry for withdrawal? If you withdraw money from bank, what is the entry? But what this nonsense fellow has done, has debited drawings account. So what is the actual entry? So this is correct entry. This is actual entry. Drawings to bank. Okay. Now to rectify, what I have to do? Cash account to drawings I have to do. But still, read the question. Out of this amount withdrawn, 90,000 was used in the business for day-to-day expenses. Now tell me, see, he has withdrawn, but 90,000 he has used for a business only. So what should be the correct entry then?
Expenses account.
Cash to bank. Later he has used 90,000 for expenses only. So expenses should be debited for 90,000. Should be debited for 90,000. Then remaining out of 150, 90 is business expenses. The 60 is drawings. So debit drawings for
60,000.
to what will you do? To cash. Correct?
So drawings to
ಏನು method ಇತ್ತು? Correct. Wait. What happened? ಒಂದು ನಿಮಿಷ. 1,50,000 drawn from the bank was debited to drawings. So ಇದು drawings to bank ಆಗೋಯ್ತು. Out of this amount withdrawn, 90,000 was used for the day-to-day expenses only. That means remaining is drawings alva. So I'll tell you. See, actual entry already there. So ಇದೆಷ್ಟಕ್ಕೆ 150k actual entry already passed. ಇದೇನಾಗಬೇಕಿತ್ತು? ಆಯ್ತಾ, actual entry drawings to bank ಆಗಿದೆ. But what has happened? Out of 1,50,000, 90,000 was used for expenses only, and remaining 60,000 is actually used for drawings. So I'll not touch that. That I will remain. Remaining out of drawings 150, 60 is actually drawing. So remaining 90 is not drawing. That I have to credit. So two drawings out of 150, 90 cannot be this. Okay. So that is what? That is expenses. Okay. So 90 done. Remaining 60, what happened? Remaining 60 is actually drawings. Correct? This is the rectification. Okay. All of you? Any doubts here? Done. Next. Second, purchase of goods worth 1,20,000 was not recorded in the books of account up to 31,325, but the goods were included in stock. That means they have omitted the purchase. One side error. It's error of omission, no? They have not recorded the purchase. Error of omission is a two-sided error. We have to record. So what is the entry? Just record purchases to not recorded in the books of accounts 31,325, but the goods were included. So the purchases to creditors. It is how much? 1,20,000. 1,20,000. I just recorded it. See, nothing they have told, so I'm assuming it to be credit purchase. Next. Purchase returns of 7,500 was recorded in sales return book journal, and the amount was correctly posted in the party's account on the correct side. Idella ninne tane madidvi. What is the correct entry? See, it is actually purchase returns. The entry should be creditors to purchase returns. How much? 7,500, 7,500. But what has happened? They have put it in sales return book. So technically the entry will become debtors to sales return, but they are telling party account is properly.
So sales return debit.
Yes, sorry. The actual entry is
Sales return debit.
sales return to debtors. So actually sales returns to debtors and then num case creditors account. Okay, na?
Credit.
Wait. Now it is entered in sales return book. So the entry should have come like this. But what they told next? But the amount was correctly posted up to the party's account on the correct side. So party's account correct is there. Correctly party's account debit. So that means creditors is also debit. So credit to ಏನಿಲ್ಲ. Amount. Now ಈಗ rectification entry ಏನು ಮಾಡಬೇಕು? So creditors debited, nothing to do. Purchase return should be actually credited to purchase return 7,500. Sales returns is wrongly debited, that I have to credit to debit. I don't have anything else. I will use. I debited suspense account for how much balance did we had? 15. Now I debited 15. Now suspense account is gone. After passing this rectification, the suspense account gone. Next, expenses include.
Suspense account ಕೊಟ್ಟಿಲ್ಲ ಅಂದ್ರೆ trading account
ಏನೇನು?
ಇಲ್ಲ direct trading account. Suspense account ಕೊಟ್ಟಿಲ್ಲ ಅಂದ್ರೆ
ಹಂಗಾಗಿರಲ್ಲ, ಯಾಕಂದ್ರೆ ಒನ್ ಸೈಡೆಡ್ ಎರರ್ ಅಲ್ವಾ, ಸಸ್ಪೆನ್ಸ್ ಅಕೌಂಟ್ ಓಪನ್ ಮಾಡಿರ್ತಾರೆ. There is no possibility that there is a one-sided error and there is no suspense account. How is that possible? One-sided error ಆಗಿದೆ ಅಂದ್ರೆ trial balance should not have tallied unless there is a compensating error. Okay, all that is not required. There will be there, bro. Suspense account will be there. Okay. Expenses include 45,000 in respect of the period after 31st March 2025. Which expenses here, if you see, this expenses, this includes 45,000 which is paid for next period. That is what? Prepaid expenses. So 45,000 will go to asset. Okay. Then anything else? Give the necessary journal entries in respect of 1 to 4 and the rectification entries which we passed, and prepare the final account for the year ended 31st March 2020. So, Madada. So we have already passed the entry. Let's start with the balance sheet. So what I will do is, I will put all the formats together. Okay, like this. Trading account for the year ended. (31st March). Let's see. 31st March 2025. Particulars, rupees, particulars, rupees. Then we have P&L account. P&L account for the year ended. Then we have add on. So one by one, what we'll do is we'll go to the question. Okay, one by one we'll do. First, capital will come where? So put it off now only. So if you do it in this way now, the chances of you missing out something will be very less. So then and there. So capital opening is how much opening? 45 lakhs. Okay. Then next, drawings 5,25,000. Correct. We have adjustment also. Minus the total drawings we have is 5,25,000. Then in rectification, what did we do to drawings? If you see the rectification entry, what have I done? I have Credited drawings, that means drawings is reduced. So we'll subtract drawings by 90,000. So minus, how much is actual drawings? Where are the drawings? That's all. How much is the drawings? 4,35,000. Okay. Then fix the sets. This will go to balance sheet. So we have 10 lakh 50 plus 15 lakh. So here only we'll put fix the sets. 10 lakh 50,000 plus additions.
15 lakhs.
Then we have to give depreciation also. Minus. So on 10 lakh 50 you'll get depreciation for the entire amount. So 10 lakh 50 into 10%. How much? There's 1 lakh 5,000. Then 15 lakh ಮೇಲೆ 6 months depreciation. How much?
75,000.
ಎರಡು add ಮಾಡಿದ್ರೆ
1,08,000.
1 lakh.
80,000.
So net is
23,70,000.
now what will happen? This depreciation. What is the entry that you'll pass? Depreciation to fix the asset. So depreciation will go to P&L account. So we'll put it out there. To depreciation account. How much? 1,80,000. So then and there you finish it off. So everything came. Next, opening stock will go to trading account. So 4,50,000. Then that will also come here. Do we have any adjustment? You know the adjustment ಮಾಡಿದೀವಿ. See, we had one purchases which we had not recorded. So what happened to this? Purchases increased by 1,20,000. So current purchases is to
1,20 lakhs.
1,20
lakhs.
ಹೌದಾ? Suddenly plus
1,20,000.
rectification 1 lakh. ಈ ಪಕ್ಕನಾ ಸಡನ್ ಆಗಿ ಅಷ್ಟೊಂದಿಲ್ಲ ಏನೋ ಮಿಸ್ ಇದೆ ಇಲ್ಲ ಕರೆಕ್ಟ್ ಟ್ರಯಲ್ ಬ್ಯಾಲೆನ್ಸ್ ಇಸ್ ಮ್ಯಾಚಿಂಗ್ ಸೊ then we have purchase returns. For purchase returns also we have done one rectification. What is actual purchase return? It is 5,17,500. Aita. But what did we do in rectification? If you see, we have credited purchase returns by 7,000. That means it will increase or decrease? Increase. So add 7,500. So ಎಷ್ಟು ಆಯ್ತು? 5,20,000. So net purchases is
15 lakh. 1 crore 15 lakh 95,000.
done. Next. Sales 1 crore 65. 1 crore 65 lakhs. Any adjustment here?
Sales returns.
Sales. Sales ಏನು ಆಗಿಲ್ಲ ಅಲ್ಲ? Sales return amount is
7,42,500.
plus that we have credited sales return. That means it will decrease. So minus
7,000.
so how much?
1 crore 57 lakh 65.
ಅಲ್ಲ ಇದೆಷ್ಟು ಇದು 7,35,000. So net
1 crore 57 lakh 65,000.
57 lakh 65. Okay. Anything else?
Closing.
ಇನ್ನೆಲ್ಲ ಸೇಲ್ಸೇ ಮುಟ್ಟಿಲ್ವಾ? ಇದು ಡ್ರಾಯಿಂಗ್ಸ್ ಎಕ್ಸ್ಪೆನ್ಸಿವ್ ಇದು ಪರ್ಚೇಸ್ ಅದು ಓಕೆ ಅಲ್ಲ ಕ್ರೇಟಾಸ್ ಅಲ್ಲಿ ಬರುತ್ತೆ ಇದು ಓಕೆ ಓಕೆ Hey, for this we did not pass entry. Fourth one, expenses include 45,000 for the next period. Andre, it is included in current year expense only. Wrong. So the expense should be decreased. So to
Expenses.
expense debit
Prepaid expense.
prepaid expenses. How much? 45k. Okay. Anyways, sales return ಆಯ್ತು. Next
Data.
we have debtors. ಏನಾದ್ರು provision ಏನಾದ್ರು ಇದೆ ಏನಿಲ್ಲ. So directly debtors. How much?
18 lakhs.
18 lakh 75,000.
Then
Creditors.
Creditors. We have a PDD.
No.
No.
Creditors.
No creditors.
16,50,000.
16,50,000. But we have one omitted purchase.
Not record. Plus 1,20,000.
ಬೇರೆ ಎಲ್ಲೂ ಟಚ್ ಮಾಡಿಲ್ವಾ?
17 lakh 70.
17 lakh.
17.
Done. Next.
Fixed deposit.
Then we have fixed deposit 15 lakh. $15 lakhs. Then interest. This will go to P&L 1,50,000. P&L by interest on FD. Is to 1 lakh.
50.
Done. Next. Bank overdraft will go to balance sheet 60,000.
60,000.
Bank OD 60,000. Then
Print account.
suspense is gone now. Suspense is gone the moment we pass rectification. Next. Rent will go to P&L. So to rent. How much are they given? 127. But out of this, how much is prepaid?
5 months.
So 5-month rent is prepaid. So 1,27,500 is for 17 months. So 127,500 divided by 17 into 5 months is prepaid. Actually 12 months is 1 year. So 5 months is prepaid. 37,500 is the prepaid. So minus 37,500. So current year expenses
90,000.
90,000. Then
Asset side prepaid.
investment. We have investment also that we have to book no on accrual basis. So by income on investment. How much was income on investment? We have already calculated. Here 1,50,000. This is the entry. So we have this income receivable will go to balance sheet. So here 1 lakh and receivable will go to balance sheet. Income
Prepaid rent.
that is also there. Income on investment receivable 1,50,000. Then we have prepaid rent of
37,500.
37,500.
Bank balance.
Then bank balance 12,67,500.
500.
Then
Closing stock.
correct no? How come expense only did not come? Here
Prepaid expense.
it came, huh? No, it did not come. Expenses total is how much?
4,80,000.
Out of this, how much is prepaid?
45,000.
It's 4,35,000.
So that adjustment.
So 90.
We have an adjustment here. No, this
Sir, one more. First one. Day-to-day expenses.
this only, Noda. I've put it as general expenses. Anyways, we'll put it here on the rectification. It increased by
90,000.
90,000. How much?
5,25,000.
5 lakh.
25,000.
So 5,25,000 done with expenses. Prepaid should go to balance sheet. So prepaid expenses.
Closing stock.
Then we have what else? Then we have closing stock, which will come in both trading and balance. So buy closing stock
750,000.
7 lakh.
50,000.
This will also go to balance sheet. So inventory 7 lakh 50,000. Then ಎಲ್ಲ ಆಯ್ತಾ? Creditors we increased, purchase returns, this prepaid expense also came, this we decreased. Suspense is gone. So done. So now let's come to trading P&L. How much is your gross profit? ಇಷ್ಟೆಲ್ಲ ಮಾಡಿದ್ಮೇಲೂ ಬ್ಯಾಲೆನ್ಸ್ ಶೀಟ್ ಟ್ಯಾಲಿ ಆಗಿಲ್ಲ ಅಂದ್ರೆ ಖುಷಿ ಆಗುತ್ತೆ. ಗ್ರಾಸ್ ಪ್ರಾಫಿಟ್ 44 lakh
70,000. 4 crore 47.
What? How much? This much only, no? How much?
44 lakhs.
4470. This will be carried down. This will be brought down by GP brought down. It is 44 lakh 20. So how much is net profit? How much? 39 lakh.
75,000.
Then now this net profit will go to capital. Net profit 39 lakh. How much is your total capital? Sorry?
Investment.
18 lakhs 40,000.
Hi.
So investment ಅಂದ್ರೆ ಬರ್ದಿಲ್ಲ.
How ಬರೋದಿಲ್ವಾ? Investment ಎಷ್ಟಿದೆ?
18 lakhs.
18 lakhs 75,000.
18 lakh. How much is your capital amount?
80 lakh 40,000.
Now please pray to God and make sure it tallies.
$98.
78.
Matching,
98 lakhs 70,000.
28 lakh. 70. Done. Sir, first time ಗೆಲ್ಲ match ಆಗಲ್ವಲ್ಲ generally ಅಂತ. I think it was a very normal problem. Huh? Yeah, and I think there's already there in that material. So done, guys. Done.
Yeah.
So then, what to do next? So we'll go for NPO. I think this should be fine. Trading. We have manufacturing. No? Manufacturing. How does manufacturing account final accounts differ? The only thing is, along with your trading P&L balance sheet, we have one more. Manufacturing account. Okay, the entity is producing the goods and selling. Okay, then it is not procuring from anyone. Then purchases cannot be there. Then what will be there?
Raw material.
Then it should the cost of manufacturing will be there. How will I find out the cost of manufacturing? See, if I purchase the goods from someone, purchases will be there. If I have manufactured the goods, then cost of manufacturing will be there. I have manufactured the goods. How will I find out cost of manufacturing? Via manufacturing account. Okay. So I'll prepare before trading and prepare manufacturing account. Okay. How will be the format? Particulars, units. Guys, in manufacturing, one extra column is unit will come. Particulars, 100% ಇದೆ. Format ಅಲ್ಲಿ ಇರುತ್ತೆ ನೋಡಿ.
Date particulars amount ಅಷ್ಟೇ.
ಹೌದಾ? Format ಅಲ್ಲ?
Sir, ನಮಗೆ ಬರ್ತಿರೋ ಕ್ಲಾಸಸ್ ಅಲ್ಲಿ
Correct. Units. We'll see ICA material.
I see one more question on the
ಒಂದ್ರಲ್ಲಿಬ್ರು ತಮಾರ ಅವಾಗ ಕನ್ಸರ್ವೇಟಿವ್. I think it should be there, guys, because I would have seen this thing. Study back. It's there. Okay.
Say the May 25.
ಮತ್ತೆ ನೀವು ಯಾವಾಗ ನೀವು ಇವಾಗ ತಾನೇ this is latest material only. Then how will madam come to know without material? There's some way for us to also to understand. For us also. ಹೌದಾ?
This was updated recently, sir.
Which one?
This material.
ನನಗೂ ಡೌಟ್ ಯಾಕೆ ನಾನು ಅವಾಗ ನಾವೇ ಅವಾಗ ಮುಗಿಸಿದ್ದು, ನಾವು ಮುಂಚೆನೆ ಮುಗಿಸಿದ್ದು, ಅವಾಗಿಂದನೂ ಇದೆ, ಒಂದು 2 months ಬ್ಯಾಕೆ ಮುಗಿಸಿದ್ದು. Anyways, now that we have come till here, we'll see the format here. Okay, now units is there, gone. So particulars, units, amount, particulars, units, amount. Okay, then what will come in the debit side? In trading account, you used to get opening stock in trading account. In manufacturing account, you have opening work in progress. Illi see here, ade last will put here. Can you see here last? Okay, that can come in first only. It's okay. So two opening work in progress, and in the credit side, buy closing work in progress. Why? Because sometimes what will happen? They are producing, but that will not become a finished product. And in the next year, it will be further processed, and it will become finished good in the next year, and it will become the cost. So what is the format? First opening WIP, closing WIP. Then in production process, what you would have used? Raw materials. Correct? You would have used raw materials. Now in the question, what they have told, the total raw materials purchased is for rupees 5 lakhs, and the opening stock of raw material we have is 2 lakhs, and the closing stock of raw material we have is 3 lakhs. Out of these three, which one will you take? Guys, you have to take RM, consume. Okay, in the production process, how much did we consume? That cost should come to manufacturing account. How much have we consumed? How to find out? The formula is opening RM plus purchase of RM minus closing RM. Correct? Does this formula make sense? Or it's simple? It's a very normal thing. Okay, your mother has bought 5 kg rice. 5 kg rice she has bought. Okay, and already you had 2 kg rice. Already you had 2 kg. Mother bought 5 kg more. Now, if you go to kitchen, there is only 3 kg. Then how much did she use for biryani? 4. 2 plus 3 she had bought. 5 should be there. But right now it is only 3. That means she used 2 plus 5, 7. 2 plus 5, 7. Right now we have 3. That means she has used 4 kg for biryani. That's how. That is how the formula is working. Opening plus purchases minus closing stock. Remaining is consumed. Okay. So here also, to understand raw material, same formula. So you have to find it out like this: opening inventory, purchase minus closing. Then all the direct expenses which are used for manufacturing will come in manufacturing account. Direct wages paid to labor, and any direct expenses, factory rent, depreciation on plant and machinery. Then what about all the indirect expenses which is used for manufacturing? Will that go to P&L? No. Even the indirect cost of manufacturing will come in manufacturing. But in the end, 2 indirect expenses, but these are directly related to manufacturing, but indirect. For example, repairs and maintenance, depreciation, factory cost. Royalty, hire charges are direct expenses. Direct expenses directly related to manufacturing. Indirect expenses relating to manufacturing, that will also come in manufacturing. Okay. Now they have told rent, factory cost, depreciation. Depreciation of what? Plant and machinery. Rent paid to factory. In nature, it is indirect expense only, but directly related to manufacturing. It will come in manufacturing account. Any expenses, direct or indirect, relating to manufacturing will come in manufacturing. Then I told you in inventory valuation, what will we do about byproducts? Any money realized from byproducts will be used for reducing the cost of production. So that's why we are putting byproducts here. Whatever money is realized from byproducts, we will credit it. By crediting it, what will happen? Your cost of production will reduce. Then by closing work in progress, then whatever remaining is there, it will go to trading account, as remaining is what? Cost of manufacturing. That will go to trading account. In trading account debit side, now instead of purchase, what will come? To manufacturing accounts. That is about your manufacturing entities. Remaining all same thing. Trading, P&L and all same logics.
Factory overhead.
Factory overheads means indirect expenses. Any indirect expenses incurred in the factory. Now example is what? Royalty, hire charges. Royalty means to produce something. Okay, your manufacturing means you are in production. So to produce something, say suppose you have taken patent rights or something. Someone has already found out the design and everything. You have bought the right to produce and you are producing the goods. To that guy, for every unit that you produce, you have to give something called as royalty. Without that, you cannot produce. For every unit you produce, you have to give him 1 rupee to him royalty, because he was the one who made this idea. So that is royalty. Hire charges. Maybe you are using this plant and machinery, that you have taken on hire. Rent. So those hire charges will come in factory overheads.
Sir, again, indirect expenses will come in P&L.
Indirect expenses of other than manufacturing will come in P&L. This will not again come. Now say suppose this depreciation I have taken of plant and machinery. If I have considered it in manufacturing account, again it will not come in P&L. That is clear. 2 times and all not there. Okay. If it's considered here, it will not come there. Done. So any manufacturing account that you have to solve. So the second question, all of you.
Sir, Samarthya.
Sir, already the Kerala.
Yenipa.
Break.
Actually, one more break I was supposed to give, but we have only 1 hour. Okay, take break for us. Fighting. How come it became 1 o'clock already? 6 hours of class. First time in my lifetime I have taken 6 hours of class.
Only for account.
Hey, Elena?
Only for accounts, it's class first.
But I am constantly speaking.
Constantly answering. Constantly answering.
ಗೊತ್ತಾಯ್ತು.
Sir, 5 hours.
That goes without saying. Okay. Now next question is on your screen. अगले प्रश्न आपकी स्क्रीन के ऊपर है ना?
अगला प्रश्न आपके स्क्रीन.
अगला प्रश्न आपके स्क्रीन पे ऊपर, स्क्रीन के ऊपर ये रहा. अमाउंट अकाउंट बनेगा CA. If you want to become, आप उत्तर दीजिएगा. नहीं तो नहीं. इधर फोन ऑफ फ्रेंड वो सब नहीं.
अगर हम इस प्रश्न को सॉल्व करेंगे तो CA बन जाएंगे.
नहीं, CA बनने की पॉसिबिलिटी ज्यादा होगी. सच्चाई तो वही है. मैं झूठ नहीं बोलना चाहता. ऑप्शंस भी नहीं है. हाँ, एक ऑप्शन है. Out of the 5 we can attempt for 4. That option is there.
Call of teacher.
No, unfortunately that is also not there. At final level you have this open book examination where you can you have seen that memes, no? All the subjects is given in integrated business something. I did not have that. It came in my next attempt. the moment I cleared. So I had only one. Earlier we had 6 different papers. You can choose anyone you want, and you can take your books. That used to come with in your bag only. Now since they have made all the subject, people take it in trolley. I'm not joking. You would have seen the memes. Yes. Over Instagram. Literally they carry in trolley. My friends and all.
One day once.
Huh?
One day once.
Illala. See, paper is of only 100 marks only. 4 hours paper. But question can come from anywhere from all the 7 subjects that you have in final. It can come from anywhere. You should have all the books. You can refer the book. But the thing is, it can come from anywhere. No. Or else they would have used ChatGPT. For that one reason, they have not allowed. Done. Any other questions you have? Last. Huh? Manufacturing, final accounts. So there's one question which I feel again is a nice question. This is something that you should know. Okay, so let's read. Mr. Magan is engaged in the business of selling magazines. So their business is selling magazines. Several of his customers pay money in advance for subscribing his magazine. Same ways again, same question you have in your report. Information related to year ended 31st March 2022 has been given below. So we are doing everything for March 2022. The information is given. On 1/4/2022, he had a balance of 6 lakh rupees in advance from customers. Guys, advance from customers is what? It's a liability to us. And the opening balance of that account is 6 lakh. Of which, of that 6 lakh, 4,50,000. That means if on 1/4/22 only, if I have 6 lakh rupees opening balance, then this money is received when? In the previous year only, I have received all this money. Out of the 6 lakh, 4,50,000 is related to year 22-23. And which year? 22-23. And the next year, we are in 22. 22-23 is next year. And then while remaining pertains to year 8, which is our year. Our year is 22-23, guys. So out of this, 4,50,000 relates to our year 22-23, and remaining under 1,50,000 pertains to 23-24. That's out of 6 lakh. Okay. During the year 22-23, he made cash sales of 15 lakh. You are required to compute simple. What is the total income for the year 22-23? That's it. Huh? Very simple. Tell me. So let's understand how advance from customers works first. So whenever you receive something in advance, money, what is the journal entry? Bank account debit to advance received from customers. In this case, we have received 6 lakh. Okay. Clear? Then next year, what will happen? Why is it considered as liability? Because still
provide the service.
Correct. No, we have already received the money. We have not provided the service. Next year, when we provide the service, then what should it become? We have to recognize the income, because first when we received, we did not recognize income. We just recognize liability. Now in the next year, what will happen? Liability will reduce, income will increase. So entry will be advance from customer's account, liability decreasing, debit. Advance from customer's account, debit to income or sales. To sales for whatever amount that I have received advance. You're understanding how it is getting adjusted in the next year. How is it getting adjusted in the next year? The liability is decreasing, income is increasing. Now here what happened? 6 lakh I have received in the previous years only, as on 1/4/22, much before. Okay. Back then it is liability. They are only telling out of 6 lakh, 4,50,000 relates to 22-23. That means to the extent of 4,50,000, we have to recognize it in which year? This year, 22-23. So what is the entry that I will pass? Advance from customer's account debit 4,50,000 to sales 4,50,000. So 4,50,000 became my income of the current year. 4,50,000. Then they have made a cash sales of
15 lakh.
see, still we have 1,50,000, but that pertains to next year. It is still prepaid. Still advance from customers. Leave it. Next, in this year we have made cash sales. Cash sales, received the money, then and there. You made sale, received money. How much? 15 lakh. So tell me how much is your total income of 2023? 15 lakh is however your total income, because cash sales. You have received the money, you have sold in this year 15 lakh plus previous year 4,50,000. So total income that you recognize is 19,50,000. That's all. Total income in 2022-23 is 19,50,000. Next, total money received during the year. If the closing balance in advance from customer account is 5 lakh 10. Now what they are asking is just the money received. I'm not concerned about income. In this year, money received. Okay. So for this, we have to take the help of the ledger. Okay. Now advance from customers, ledger will put. This is what? Liability. Liability will have a credit balance. So what is the opening balance? 5 lakh
10,000.
10,000 rupees. Alala. Hey. Yellappa.
Second question.
See, the opening balance was earlier. See, it is 6 lakh, not 5 lakh 10. It is 6 lakh rupees. Okay. Out of this, how much did I recognize as current year income? Out of 6 lakh, 4 lakh 50 went. So advance from customers to sales. How much? Done. Then we have the closing balance of advance from customer is
5 lakh 10.
so where will closing balance come? Here. Correct. Because advance from customer is liability, it will have credit balance. So closing balance will come. What is the closing balance? Okay. If 5 lakh 10,000 is the closing balance, then how much is the money that I have received in the current year towards advance from customers? So what is this balance then? 3 lakhs. This is nothing but balancing figure. The money that you have received. How much? This is 9 lakh 60. So this is this you found identify as balancing figure. Correct no? Opening 6 lakh, closing 5 lakh 10. They have only given. How much you transferred to income? 4 lakh 50. If 6 lakh is there, 4 lakh 50 is transferred to income, means remaining is 1 lakh 50. Remaining is 1 lakh 50, but the closing balance has become 5 lakh 10. Why did it increase? Because maybe you have received some more money towards advance. That is 3 lakh 60,000. So towards advance, how much money you received? 3 lakh 60,000. Plus in cash sales also you would have received money only, no? How much money via cash sales you received? So 15 lakhs cash received. Plus towards advance I received 3 lakh 60. Total
18 lakh.
So 18 lakh 60,000 rupees is the cash received during the year. Okay. Income received is income recognized is 15 lakh cash sales because income will be recognized then and there. Plus 4 lakh 50,000 which pertains to previous years. Any doubts, guys? Done. Simple. Any other question you have in your mind? Because most of it is already there in our material. That's the thing. Okay, we'll take this one. How much time do you have? 20. See, this question is also asked for 5 marks. I thought. So if at all, if it comes in your exam, I don't want you to miss. That's why I am discussing this. See, following information is provided for Mrs. Diana Fiber for the year ended 31st March. You are required to pass closing entry in the journal proper. And the closing entry is incorporating everything to trading P&L account. It's called closing entry. For opening entry, how will opening entry come to trading account? Journal entry.
Trading account to opening.
Trading account to
Opening.
Next purchases. What is it? Trading account. Then carriage inwards, direct expense. So it will come in trading account. Trading account to carriage inwards. Wages. Wages. Sales. Returns inward. What will do for returns inward? Purchase the sales returns. What will we do? Literally, we subtract it from sales. So we are not putting to trading. We are subtracting it from sales. So what you do? Sales. Whenever sales returns is subtracted, sales is decreasing. Correct? So debit sales account, credit sales returns account.
Sales to sales.
Sales account debit to sales returns account. Because if you subtract, sales is decreasing, no? Give the effect there only. Sales account, it says a credit balance to decrease debit. Sales to sales returns account. Then returns outward, purchase returns account to purchase. Closing inventory, factory rent. Okay. Then once you do, see here they have done a combined entry for all this. Anyways, we did it separately. Both are okay, no problem. Then what will come after putting everything in the trading account? Gross profit will come. So you have to calculate gross profit. How much it is? 3,50,000. So entry will be trading account to gross profit. Later you carry forward this gross profit to P&L. So that one entry. Gross profit to P&L. So that one. Same thing. 5 marks. Now I had given this one time to our students. Like they had left it.
I did it, sir, at last scratch.
Ditto.
ಇಲ್ಲ ನೋಡಿ ಇವಾಗ ಹೇಳಿಲ್ಲ ಅಲ್ಲಿ ನೋಡು
Done, guys. Let's go to manufacturing. We'll prepare manufacturing account. So come here. Now you know the format of manufacturing account. What is the format? Manufacturing account, particulars, units rupees, particulars units. Now tell me each thing where it will come on, one by one. Simple manufacturing account. Okay. First, opening WIP will come in debit side. Closing WIP will come in credit side. Then raw materials. What will you take? You have returned indirect and all. What to do? So what is the RM consumed formula? Opening RM plus purchase. So opening plus purchase minus return minus closing stock. So consumed is calcina ಉಪಯೋಗಿಸಪ್ಪ ನೀ ಯೂಸ್ ಮಾಡಬೇಡಿ. Then you have something called as indirect material. Idan ಮಾಡೋದು. I'll only tell you do it. 3,02,000 plus 12,10,000 minus 3,10,000. Minus 3,10,000 minus 18,000.
11,84,000.
So 11,84,000 is RM consumed. If you see, there is also indirect material. What to do? Add up. Indirect, no. Will it go to P&L? Yeah, I told you. Any direct or indirect. If it is related to manufacturing, it should come to manufacturing. So if they are telling it's material, the material is used, but the nature is indirect. So it will not come in RM consumed formula. It will come later in manufacturing account as to indirect material. Because it is related to manufacturing. Material, what will you do? You use it for manufacturing. Then wages, direct, will come in debit side of two wages account. Indirect? Indirect wages also what? Wages means what? Paid to laborers. Related to manufacturing only, no? But it is indirect. So it will come later as indirect wage. In manufacturing only, it will come later as two indirect wages, 48,000. Direct will come initially only. You know the format, no? First direct thing will come, then indirect expenses will come.
For the transportation charges.
Transportation is just given transportation, put it to P&L. Okay. See, only test that you have to do is it directly related to manufacturing or not? If it's related to manufacturing, put it in manufacturing.
Related to raw material, then
Put it in manufacturing. Okay. Then we have royalty on production. What to do? Royalty is what? Is it direct expense? Yes.
Yeah.
For manufacturing each and every unit, I have to pay royalty. So it will come in debit side of manufacturing. Then repairs and maintenance. Debit side of manufacturing. Here I'm assuming it is related to manufacturing. Depreciation on factory shed. Shed andre ಯಾರಲ್ಲ Depreciation on factory shed. It is directly, without factory shed we cannot do production, so it will come in manufacturing account. Depreciation on plant and machinery, yes, it will come in manufacturing account. Byproduct, you have sold the byproduct and you have got 20, it will come in credit side, and the remaining balance you transfer it to trading account. So see, once the remaining you will transfer it to trading account, cost of finished goods transfer.
Sir, if unit is not given in what we have,
Don't put it just.
don't put it on.
I'll
We have
put
to
it.
show.
Andre, don't.
Format.
In format, do one thing. You put units and don't show anything in units. That's all. Better, no, better presentation. Okay. And now see, whereas indirect wages come here. Indirect material, it has come here to manufacturing overheads. Overheads means indirect expenses. Correct. Then 11,84,000. Correct. Then depreciation, everything has come. Then byproduct has come. Closing WIP has come. Remaining is transferred to trading account. Simple. If these questions come, no, please don't leave it. Appa sikkide chance ee sali nan pass agbekantaನೆ ee question bandide anta ankondu ಮಿಸ್ಸೇ ಮಾಡಬಾರದು. Okay. We'll do one more big problem, we have half an hour. By the time we finish, half an hour will be, we'll finish, in half an hour we have to finish. Okay. Question number 5. All of you should do it now, together with me. Okay. Done. I am tired. I am done. Okay. Now let's read the question, guys. The following is the trial balance of Mr. B for the year ended 31st March 2020. The thing is, the pace immediately became very fast. Imagine we have 2 whole days, that 6 hours for only partnership accounts and company accounts. What to do tomorrow? So let's solve more questions. We'll do it. We have time for that. Okay?
Sir, 8 to 8 daily.
8 to 8.
Evening.
ಇದಾದ್ಮೇಲೆ ಇದೆಯಾ ಇನ್ 2 ದಿನ ಅದಾದ್ಮೇಲೆ ಯಾರು ಕೇಳೋರು ಆರಾಮಾಗಿರ್ಬೋದು. Guys, you should be very, privileged that someone is doing all this for you. ನಮ್ಗೆ ಇದೆಲ್ಲ ನಾವೇ ಮಾಡ್ಬೇಕಾಗಿದೆ.
Thank you, sir.
Thank you, I have to thank the academy.
You are teaching us.
They'll pay me, no? So I would give this credit to academy because no academy does this revision sessions. Because even when I used to be during my coaching days, ಅದು ಮುಗಿತಾ ಮುಗಿದ್ಮೇಲೆ ಡಮಾರ್ ನಿಮಗೂ ನಮಗೂ ಏನಿಲ್ಲ ಅನ್ನೋ ಥರ ಕಳಿಸ್ಬಿಡೋರು ಪಾಪ. ಹಿಯರ್ ದೇ ಆರ್ ಅರೇಂಜಿಂಗ್ ಆಲ್ ದಿಸ್ ವಿಚ್ ಇಸ್ ಅ ವೆರಿ ಗುಡ್ ಥಿಂಗ್. Correct. No? So how to make use of this session is you have to solve the other problems also and come back with doubts. Then it will be more useful in my opinion. Because tell me one thing, we have already discussed all this during your classes. There's no point in again solving the same questions. Correct? Best what you can do is come up with doubts so that whatever doubts, this will not come later. ಈಗೇನಾಗುತ್ತೆ, ನೀವು ಆಕ್ಚುಲ್ ಆಗಿ ಓದಕ್ಕೆ ಸ್ಟಾರ್ಟ್ ಮಾಡಿದಾಗ ಒಂದಷ್ಟು ಡೌಟ್ಸ್ ಬರುತ್ತೆ. ಅವಾಗ ಅಯ್ಯೋ ಇದು ಅವತ್ತೇ ಕೇಳಿಸ್ಕೊಂಡ್ಬಿಟ್ಟಿದ್ರೆ ಚೆನ್ನಾಗಿರೋದು ಅಂತ ಅನ್ಸ್ಬಾರ್ದು. ಸೊ ವಾಟ್ ಯು ಹ್ಯಾವ್ ಟು ಡು, ದ ಬೆಸ್ಟ್ ವೇ ಟು ಮೇಕ್ ಯು ಕ್ಲಿಯರ್ ಇಸ್ ಪ್ಲೀಸ್ ಸಾಲ್ವ್ ಇಟ್ ಅಂಡ್ ಕಮ್ ಬ್ಯಾಕ್ ವಿತ್ ಡೌಟ್ಸ್. ಓಕೆ, however we'll solve, no problem. And we had to solve one model paper also. Correct? Which one? Any. Simply you want me to solve.
We will solve along with.
Yeah. Okay. Come on, wait. Fast. No battery only. ಅಷ್ಟೇ. Manufacturing, trading, P&L for the year ended 31st March and balance sheet. Okay. So one more thing is here you have to do manufacturing account also. That is one thing. So tell me which all will come to manufacturing account. Okay, one by one we'll discuss. Opening stock only. Will raw material come in trading? No, it will come in manufacturing. That too consumed will come. So how will you calculate consumed? Opening plus purchase minus. So do you have any this thing? Opening you have here 5,25,000. Purchases 17,50,000. Then if you see you have purchase return also in the credit side. So that you have to subtract. Minus, do you have any closing stock of RM? Nothing. So that's all. There is no closing stock of. That's all. So how will you find out raw material consumed? Opening plus purchases minus purchase return. No closing stock of RM. Leave it. Okay. Next, finished goods will come in trading account. Purchase of raw material done. Land and building. Balance sheet. Loose tools. What is it? Loose tools. Asset. It is those consumables or loose tools. Correct? Which will come to P&L on the basis of consumption. Okay. Next, plant and machinery. So what you understand is loose tool is an asset. Understand that. Make it elaborate. Okay. Plant and machinery. Balance sheet. Investment. Cash in hand. Cash in balance sheet. Furniture. Receivable. Coal and fuel. Manufacturing account. Factory rent and rates.
Manufacturing.
General expense.
P&L.
Advertisement.
P&L.
Sales return. Trading. Bad debts.
P&L.
Direct wages.
Manufacturing.
Power.
Manufacturing.
Interest paid.
P&L.
Discount allowed.
P&L.
Carriage inwards.
Manufacturing.
Manufacturing account. Hey, no trading because we are producing. Carriage outwards. Hey, is carriage outwards responsible for manufacturing? No, it will go to P&L. Commission paid.
P&L.
Dividend paid.
P&L.
Will dividend paid come in P&L? What do you think? What dividend paid is an expense? What do you think? Huh? Dividend paid. See, it's coming in the debit side. Guys, dividend paid. Dividend is never an expense. Dividend is an appropriation of profit. Remember? Dividend is an appropriation. Expense alla. Company duddiro dudna, you are giving it to owner. But it's an expense. So where will this come directly? It will come in balance sheet. Correct? We'll reduce it from. Hey. Then. What is the entry for dividend paid? First of all, the fact that is there in trial balance means it is already we've already done. So dividend account debit to bank. So entry is already done. Nothing for you to do about it. Okay, nothing. Dividend is already. No. It is already there in trial balance. So that means entry is fast. It will not come in P&L. Okay. What you do is from net profit. Aita, subtract as dividend paid. In P&L it will not come. Clear? In P&L it will not come. What you will do in balance sheet? Opening capital plus profit for the year minus dividend paid. Aita, bank will not do anything. Entry is already passed. It will take care. So it will not come in P&L. Very important. Okay, note it down. Next, sundry creditors balance sheet, purchase return trading, capital balance sheet, bills payable balance sheet, long-term loan balance sheet, PDD.
P&L and balance sheet.
Idel go with this account especially. This is opening balance of or a closing balance of PDD as of now. You know PDD is what natured account? Liability natured account. But not a liability, but liability natured account. Sales, trading, bank overdraft, balance sheet. Trading account. Hey, sorry, if you have considered in RM, no. From RM we have subtracted it. Here it will not come to trace. Okay, we subtracted it from RM. Why are we taking this purchase return in RM? Guys, first of all, we are manufacturing entity. Why will we have purchase or purchase return? What was he telling?
Purchase return.
Purchase. We are manufacturing entity. Do you think we'll purchase and sell? No, we'll manufacture and sell. But still, if we have purchase return, means what? It is raw material purchase. That's why I subtracted it from raw material purchase. Again, in trading, it is not. Because we don't have purchase only in trading account. Next, PDD 7,000. Let's come to the adjustment. Stock of finished goods. This will come in trading account as well as balance sheet. Then PDD is to be created at 5% on sundry debtors. Okay, that means how much is my sundry debtors? See, my sundry debtors is 1,40,000. So 5%. I've always told PDD should be maintained. So 1,40,000 into 5% is how much? 7. It should be maintained at 7,000. Right now, how much opening balance I have?
7,000.
I already have 7,000. Where in question we have? Where? Here, guys, if bad debts is already there in trial balance, that means entry is passed. You don't do anything. I've told you now 2 methods to address this. One, if bad debts is happened and you have not passed the entry, that means write off the bad debts. Bad debts to debtors entry you have to pass. Have you already passed here? Yes. If something has come to trial balance means bad debts to debtors entry is already passed. Then what did I say for provision? That you see separately. The closing should be maintained at 7,000. Opening is don't do anything. You'll get the same exact answer. Adinone method is there where they'll write off the bad debts, all that they'll do. Guys, it's confusing. Simple. Whenever bad debts is there, 2 things. First, see if the bad debts is written off. If they've already written off, don't do anything. If it is given in the adjustments, write off the bad debts. How to write off the bad debts? Bad debts account debit to debtors.
Yesterday I saw the like provision for bad debt 2,000 and bad debts is 4,000. So again they are creating.
Correct. That is one more method of doing. I can tell, but it's a very confusing thing. Okay. This alternate method is very simple, no? Bad debts, it is in trial balance means don't do anything. Then bad debts written off entry is already passed. Then what you have to do? See the provision. You have to maintain the provision at 7. Opening is already at 7. Don't do anything. Leave. You'll get the same exact answer. You can solve it. Go home today and you can solve it if you want. Try my method. If you're getting different answer, we'll discuss about it tomorrow. What am I telling? If bad debts is given in adjustment, that means written off is not done. You write off. Bad debts to debtors you do. Your debtors will decrease. Okay. If bad debt is already there in the trial balance, that means entry is passed. Don't do anything. Just see the provision. Closing opening note. Closing eleg maintain 7,000. Opening is already 7,000. Don't do anything. If closing is 7 but opening is at 2, then you have to create provision by 5,000. The entry will be P&L account debit to provision account 5,000. Worry closing opening note. Bad debts trial balance is there. Don't worry about it. Only if it is in adjustment, worry. If bad debts is there in trial balance, don't worry. Entry is already passed. You just see the provisioning. You still get the same answer. You can do it in home and come back tomorrow.
So, debtors have 7,000 minus 9.
debtors 7,000 ಏನು ಅದು ಮಾಡಬೇಕು ಬಿಕಾಸ್ ಕ್ಲೋಸಿಂಗ್ ಬ್ಯಾಲೆನ್ಸ್ 7,000 ಇದೆಯಲ್ಲ. ಸೊ ಬ್ಯಾಲೆನ್ಸ್ ಶೀಟ್ ಮೇಲೆ ಡೆಟಾರ್ಸ್ ಇಂದ 7,000 ಈ ಸಬ್ಟ್ರಾಕ್ಟ್. P&L ಅಲ್ಲಿ ಏನು ಬರಲ್ಲ ಯಾಕಂದ್ರೆ ಆಲ್ರೆಡಿ ನಮ್ಮ ಹತ್ರ 7 ಇತ್ತು. ಸೊ ನಮ್ಗೇನು ಜಾಸ್ತಿ ಕಡಿಮೆ ಮಾಡೋವಷ್ಟಿಲ್ಲ. ಸೊ P&L ಏನು ಬರೋದೇ ಬೇಡ. ಆ ಬ್ಯಾಡ್ ಡೆಟ್ಸ್ ಟ್ರಯಲ್ ಬ್ಯಾಲೆನ್ಸ್ ಇಲ್ಲದ ನಾರ್ಮಲ್ ಆಗಿ ಬರಲಿ, ಅದು ನಾರ್ಮಲ್ ಲೆಕ್ಕ. ಬ್ಯಾಡ್ ಡೆಟ್ಸ್ ವಿಲ್ ಗೋ ವೇರ್ ಟು P&L. That let it go. But with respect to provision, nothing will go because 0 0. Okay. Done.
So is there any difference between create and maintain?
I told no. If they are telling create, see, even if they are using create maintain, what you have to do is they say create PDD, apply that percentage on debtors. Debtors is 1 lakh. 1,40,000 into 5% andre 7. What you have to do is once you calculate this, see if you have any opening balance of provision. If it is 0, create 7 entirely. If opening is already there, maintain it at. Generally, they'll use the word maintain only. If they use the word maintain, do it like how I told. Maintain the closing balance at that value. Okay. Create andre, if they say create PDD for 5,000, increase the provision by 5,000 rupees. Create and you are creating the provision. Maintaining and you are maintaining the closing balance at that value. Closing balance of what? Provision for doubtful debts. So here nothing will go to P&L with respect to provision. Bad debts will normally go. Okay. Next. See, if you see here, just to show you. Now here if you see bad debts, all this they have done. Provision 7 no, add back 14 no, less old 7 no. Technically 14 has come to what? 14 has come to your P&L. In my method, what will happen? All this will not come. Only bad debts will come. How much is bad debts?
14,000.
Will there be any difference in the profit? No. All this will not come. Only bad debts will come. 14. Here also 14. Same thing. Okay. You follow this method, it's much simpler. No need to apply brain all this 7, 14. Simply it will get set. Okay. Next, accrued commission is 43,750. So this is the commission paid. So how much is the accrued commission? Andre, that much service you have received, but you have not paid. Okay. How much? 43,750. Out of that, how much you have paid?
17.
So out of 43,750, 17,500 you have paid. So how much should come in P&L? Accrued should come in P&L. I've always told we are following accrual base of accounting. So in P&L account, in commission, how much should come? 43,750 or 17,500. See, 17,500 is paid via cash. 43,750 is accrued. That means I've used the service. So which one should come? 43,750. So to commission, 43,750. But out of 43,750, 17,500 I've already paid. Remaining 26,250. Have I paid it? No, it is payable. Outstanding expenses that will go to balance sheet. Then interest as accrued on investment 52,500. Accrued andre, that is the interest that I have earned. But how much have I received already? On investment andre income. Now see, in the credit side there is no interest income at all. That means they have not received. So I have to book the accrued income now. So what is the entry to book the accrued income? Interest or income receivable account debit, because money is not coming. Receivable is there. So income receivable account debit to interest. So how much? 52,500. That will go to P&L. Further receivable will go to balance sheet. How much amount? Entire 52,500. Because nothing is already received. How do you know whether something is already received or not? It will be there in trial balance. In trial balance, if I had income on investment, that means that much was already there, received. But if you see in trial balance, is it there? No, that means entire thing should be booked. I have not received anything. Next, salary outstanding 7,000. What will you do? Add it to the salary 7,000. Since it is outstanding, you have not paid. So add it to the liability side in the balance sheet. Okay. Then prepaid interest. If you see here, interest paid is already 24,500. Out of that, how much is prepaid? 5,250. So from 24,500, remove 5,250 and put it in balance sheet as prepaid expenses. From 24,500, subtract 5,250, put it in balance sheet. If you do all this, we are done with manufacturing. Now that I've discussed everything, this you will do it in home. I've discussed all the adjustments. Try the same thing in home. Any problems we'll discuss tomorrow. Question ಬೇಕಲ್ವಾ? What? Matter what? ಇದೊಂದು ಇದು. I'll send it once I reach. Okay. So done now guys.
ಫೋಟೋಸ್ ತೆಗ್ದು ಯಾರಿಗೆ ಕಳ್ಸಿ?
Group ಹಾಕಿ.
ನಮ್ಮ ಗ್ರೂಪ್ ಇದೆ.
ನಮ್ಮ ಗ್ರೂಪ್ ಹಾಕಿ, ನಾನು ಇವ್ರಿಗೆ ಹಾಕ್ತೀನಿ.
ಹಾ ಸರಿ.
Okay, bye guys, done with today.